Varsha, thank you so much for that. And overarchingly, I think what Varsha is saying that there is lack of clarity in certain things, but they don't submit many positives from such a move. Adish Patil, CFO and CEO of Aarti Drugs, joins us right now on the show to talk about this very aspect. And Adish, thank you so much for taking the time and speaking to us. These are, these are difficult times. Reporting on it is also difficult. I'm sure going through it as a business must be difficult. What is your prima facie reading, or what does an order of this nature do for Indian exporters, pharma exporters, that is?
Yeah. So as far as the formulations are concerned, definitely the patented and the premium drugs would be impacted quite a lot. What I heard, I don't know whether it is true or not, that for a few of the European countries, EU nations, it might be still restricted to 15% based on the individual deals done by those countries with the US. So in that case, if those European companies are already active in US, their market share will increase quite a lot, is what we feel. As of today, for companies like us, which are majorly into APIs, there is no tariff on APIs as such. And even if there is in future, so if the API is exported to Europe and from there if the formulation goes to US, then it will still be circumvented for people like us. But then yes, this is very challenging times, and I hope that soon something stable comes out.
Some companies or some peers that we spoke to of yours said that it's a moving situation and it's not certain if the tariffs will be across the value chain or it's only at the end product, right? And correct me if I'm wrong. So if that is the case, it is not certain if APIs, which are a part of the value chain and not the end product, might also not be subject to tariffs.
Yeah, very true. But as of now, they have left out APIs anyways. In this is what I read.
Okay.
And probably there might be some formula like 50% value addition or 60% value addition. If that qualifies, then the country of origin can be determined as Europe. There are some laws where they have to determine whether the country of origin is still Europe or is it indirectly coming from India itself. And API plays a very small quantum in formulation, that in terms of value. So hopefully, if that is the case, then it might get circumvented, but who knows?
Adish, afternoon, Hiral this side. So, as you mentioned, absolutely right that the announcement does not really talk about the tariff action of API or ingredient manufacturing, fill finished products and device manufacturing. Now, taking the complexity of this global supply chain into consideration, the tariff announcement seems incomplete. Do you think large branded, patented pharma companies can still be able to avoid tariffs by announcing either a capex or a M&A or a partnership in the US?
Yeah, so that there is quite a big loophole. Like even if you announce a capex or show that your capex is going on in US, you can still circumvent this tariff situation. I don't know how much time they will give for that CB period, means 2 years, 3 years, and till that time, if something changes, then probably it's very uncertain, frankly speaking, to take decisions based on what is happening currently.
Moving away from the tariff aspect, now if you have to talk about Aarti Drugs as well, you just gave in your investor presentation where you've indicated that you've completed a capex of around 600 odd crores. That's nearly complete. That will boost your capacity, that will boost your margins from here on. With everything said and done, what's the kind of revenue addition that you're expecting in terms of FY26 and 27 on the back of these increased capacity and the capex?
Yeah, so FY26, we don't expect much because still the export scenario is quite challenging for us, and we are also scaling up the greenfield projects which we have just commercialized in this year. Both the greenfield projects, the Saika one and the Tarapur one, have been commercialized. The Tarapur one is the salicylic acid. The total potential of revenues from that plant could be around 200 to 250 crores. In coming years, it might take little time. Anti-dumping, we are also expecting anti-dumping duty in that particular product because we have observed dumping of that particular product by Chinese manufacturers since we entered the market. So it's a very good candidate for anti-dumping duty. Then talking about the SciCap project, we just successfully commercialized that plant. It is mainly for backward integration, but overall, the potential of revenues is anywhere between 200 to 300 crores from that plant. It is still scalable. We still have some plot left to put derivative products for that chemistry, but majorly it will be backward integration for one of our very big anti-diabetic product portfolio.
Okay. Apart from this, what's the revenue potential that you're seeing on the back of these two units?
Yeah. So without considering these two units, we have a revenue potential of roughly around 2,800 to 3,000 crores, including the formulation business. And with these two greenfield projects coming online, it can go anywhere, in the zone of 3,500 crores. And plus the oncology block for formulations, which we have put last year, the utilization will start after 2 and 3 years, in the second and third year. So that can also have a revenue potential of roughly around 400 to 500 crores additional to that. So in longer term, let's say in five years period, something between the range of 3,500 to 4,000 crores is what we see the revenue potential of the company.
Okay. Adish, I'm just sorry, but as a final question, just taking it back to the bigger worry for the markets right now. As you said, you guys are not impacted, but the stocks are still down 7-8%, right? And there's a pall of uncertainty around what could happen. So my simple question is this: if indeed even Indian exports of APIs or other products get tariffed, if you will, what is the kind of earnings hit that could come in? It's hypothesis, right? I need not need to be exact, but some sense, some color.
Right. So as of now, our US sale is almost zero as of today. So, but in future, we are banking on the oncology segment in the third and fourth year. Those oncology products will go to US, and they probably will be termed as premium drugs. So might face that 100% tariff. As far as the API business is concerned, what we feel, if EU companies started exporting to US, then selling it to European industry, we can still circumvent, is what we feel. And most of our product portfolio is in generics. If you see all the APIs which we manufacture, they are all essential drugs, and they are already cheap drugs. And I don't think that US administration would want to increase the cost of the low-end drugs for their public. For the patented drugs, where already the prices are very premium, it's okay. But for the underprivileged one, it will be very, there will be harsh backlash from those people if they increase the prices of the generic drugs. So what we feel that our product portfolio will be least impacted. And as of now, it is not impacted at all. But even if it does, it will be least impacted, is what I feel.
We will leave it at that. Thank you so much. And we do hope that what you said and what your initial feedback is turns out to be true. The markets can do without one key sector being impacted by tariffs. But thanks for joining in today. Okay, that's Aarti Drugs. Saying that as of now there isn't a case for a worry based on their research, but never know. For now, the market seems to be in a mood of punishing first and asking questions later. Aditya Agarwala, a word on Pharma, if we haven't spoken about it earlier, even if we have, which is the stock that is looking the weakest in that lot. Couple that up, of course, with your stock-specific ideas for the afternoon.
Afternoon, Neeraj. So a few of them do look weak, definitely, and some of them are looking strong. So let's start with the weaker ones first. Laurus Labs and Biocon. These are the two stocks which look the weakest on the pharma. Let's talk about Laurus Labs first. I think after the sharp run-up that the stock had witnessed, now it's showing a bit of weakness, and today we are witnessing that setting pressure on decent volumes as well. So it can slide all the way down to 800 and sub 800, 790 levels as well. So one should watch out for Laurus Labs. If you already have in your portfolio, keep strict stop losses of 820 on the downside. If that is broken, then chances are it can slide another 30 rupees lower to 730, 790 kind of a level. And then, of course, Biocon is something which is looking the weakest at this point of time because of the sharp selling pressure that we're witnessing in the stock. Broken down from its 200 DMA as well. On the downside, stock can test levels of 310, 300 as well. So there's a sharp downside that I see in Biocon. And Lupin, to a certain extent, is also looking little weak as far as weakness is concerned, can slide all the way down to 1870, 1900 as well. One of the stocks which has actually bounced back from the lows and looks like can have some upside is Dr. Reddy's is one which is looking slightly better off as compared to these rest of the names. And if it holds on to its 200 DMA, which is around 1240 odd levels, chances are Dr. Reddy can test levels of 1340, 1350 on the upside. And Sun Pharma, which was supposed to be one of the weakest stock post this tariff implication, has actually bounced back from the lows and formed a double bottom kind of a zone around 1540 odd levels. So that can be kept as a stop loss, strict stop loss on Sun Pharma, and a long addition in Sun Pharma can be looked at for a target of 1700, 1750. So two stocks on the downside and two stocks on the upside can be a good pair trade on the pharma side. Now talking about my own stock recommendations, I've got a buy and a sell. So buy is on Samman Capital. This is one stock which is actually bucking the trend and looking strong on the charts, is forming a narrow consolidation base. And from here on, I think the stock will build on to its gains in the coming trading sessions. So for a target of 155, I'll be a buyer in Samman Capital with a stop loss at 128 on the downside. IT clearly is looking very weak, Neeraj, at this point of time, and especially the mid-cap IT names. Within that, I think Persistent System is the weakest and can be sold at current levels for a target of 4800 on the downside with a stop loss at 5100 on the upside.
Okay, an IT name and a short call there. That's interesting. Thanks a lot for that, Aditya. What we'll do is we'll take a quick break. Stay tuned to NDTV Profit though. We're on the other side of the break. We'll bring you the top 3 stocks to watch, some analysis of what could be going wrong with the markets currently, what is being heard in the dealing rooms, and more. Stay tuned.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us where the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
To almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective, because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है
सोनू निगम के लिए जोरदार तालियां।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Markets have really cracked this week, and as we look at the lowest point of the day today and below 24,700 or thereabouts, the question that comes to mind is what is worrying the markets? Well, I think the reasons are well known, just laying them out for you point wise. One, the easing of the India-US relationship is uncertain for now. We are all making the attempt for that to happen, and I think about 2 weeks ago the belief was that because of the exchange of statements between the two leaders that there was a resolution coming. It hopefully is coming for both the countries' sake, but for now that uncertainty has crept in, which is why the markets have pivoted back to that zone wherein you don't quite know what will happen next. Valuations, we are no longer as expensive as we were, but we are certainly not cheap as yet. And I think the argument on valuations can be done in both ways. There are some sectors which will see earnings hits, and therefore the FY26 EPS is not necessarily certain to be growing at 12%. It could well be single digits or low single digits as well, which is a bit of a worry. So you got to keep that in mind. The markets currently are in a mood to punish first and analyze later. It is no longer a market wherein you will take time, analyze, and if there is a problem, you go out and sell. Markets are saying, let's sell first. If there is no problem, we'll buy it at lower levels. And I believe that is what is happening with pharmaceuticals today. And I think so many trading losses because the bent until Monday was on the long side that traders may not be able to take large trading positions due to the sudden losses this week. So don't expect a swift recovery because of this surprise turn of events that have happened in the last 3 or 4 days. There are antidotes. I mean, the HSBC view on India, wherein they've turned overweight, is giving out that antidote, right? That the government policy is becoming positive for equities, which is actually a good sign, and they've given various reasons for the same, and that the FI positioning is very, very weak on India. But for now, we do know that the worries outweigh the positives on FI ownership as well as better valuations. So until the resolutions are reached on the worries, we might well have a market which is biased towards the downside.
Absolutely, Neeraj. Thanks for that. So clearly, this becomes the major overhang that we should be watching out for in terms of the trade negotiations between India and US. But the moment that comes through, that entire puzzle that Neeraj was explaining towards the end as well, probably gets solved, and that's when you would see that buying interest that could be coming back. But let's get in. Kunal Shah of Mirai Asset, Sher Khan, and Sudeep Bandyopadhyay of Intertrade Capital coming in. Kunal, let me come to you first. With regards to where the levels go, we've broken, the major support levels as well in today's session. Where from here on, and what should that strategy be?
Firstly, good afternoon to everyone and happy Navratri to everyone. Firstly, what we have seen in the Nifty indices, 24,400 to 25,450, 480. This was the entire rally what we saw in the recent times. And if this rally had to sustain, we had to stop at the 61.8% retracement of this rally, which was at 24,800. Clearly, once we broke that mark, the 20-day moving average was also breached, and that again negated the entire up move. So now again the up move has been negated. Now from a buy on dip market, this has become a sell on rise market. We have already seen 6 days of fall, so probably now most of the indicators are in the oversold zone. So you might expect some technical bounces coming in, but still that 24,400 is where I'm expecting Nifty to go, even from the current levels as well. So the short-term trend continues to be on the negative side. Any pullback in the indices would be a good opportunity to initiate on the short side. And we can expect Nifty to test the support zone of 24,400, 24,500 on the lower end. So the charts are looking weak. Where is the pressure coming from? IT. IT has broken the swing low. And that is where we were seeing that when Nasdaq was making an all-time high backed by the AI stocks, our Nifty own IT index was making clear-cut new lows. And that is where the pain point was. And IT has still further downside left with the new levels coming around the mark of 31,500, 32,000 for the indices. So I think that will put pressure on Nifty as well, and you can expect further lower levels on the Nifty index. So that's weak. Coming to the Bank Nifty. So Bank Nifty in today's trading session has breached the 20 DMA. So again, Bank Nifty has strong resistance at 56,000. Now we were already trading in a downtrend. We had a strong pullback, but 56,000 was not taken out. If that would have been the case, we would have seen as a trend reversal for Bank Nifty. So the trend again continues to be on the negative side, and Bank Nifty again could test the lower levels as well. So Bank Nifty, the two big boys, HDFC and ICICI, had already given up 3 to 4 days back when both the stocks had breached that short-term moving averages of 20 DMA. In fact, ICICI Bank even broke the swing low. So clearly, weakness persists over here from IT, from banking, and that would lead to the selling pressure on the downside. So no need to be a contra at the current levels. You might have some pullbacks coming in because we are in the oversold zone, but again, utilize that pullback as a selling opportunity. Bank Nifty is again heading lower towards the mark of 53,500, 400 mark, and that is the immediate support. And once we close below that, then even you will see further downside level coming in the Bank Nifty indices. So I think it's a worry of cautious at the current levels till the time Nifty doesn't surpass 25,200, 300 mark on the upside, which is where the reversal would come in. This entire downfall would be negated. And for Bank Nifty, till the time we don't surpass 56,000 on the upside, the market could be on the downside and could test the lower levels as well.
What about the ideas for the afternoon, Kunal?
See, I think two stocks. First on the sell side is capital goods, and here I'm focusing on Siemens. So Siemens, if you had seen on the technical chart, recently the stock had given us a breakout from a small consolidation, and there was no follow-up post that. Now the breakout low has also been taken out in today's trading session, in the previous trading session, and now we have reached the short-term moving averages as well. So that is looking extremely weak on the chart, and you can expect further selling pressure in Siemens towards the mark of 2940, 2960 on the lower end. So Siemens is a sell for me with a stop of 3160 on the higher end. You can expect targets of 2,940 to 2,900 on the downside. So that's the first on the sell side. Second stock, what I pick up on the buy side is again L&T. Clear-cut breakout what we have seen in the stock over here. And again, these were the multiple resistance zone for the stock around the mark of 3720, 3700 zone. Today, we have taken out that levels with volumes, and we are sustaining above that even in a weak market, clearly indicating a strong trend for L&T going forward. relative strength is clearly visible. Once the market settle down, goes into a sideways mode, we will see L&T continuing its move on the upside. So L&T is a buy for me with a stop of 3640, looking for targets of 3900 to even the all-time high levels of 4000 could kick in.
Okay, so that's with regards to the topics, but let's just quickly address the commentary that is coming in from the Ministry of Commerce and Industry. They've issued a statement on the visit of the Indian delegation to the United States of America between the 22nd to the 24th of September, and they've said that the minister had meetings with the ambassador of United States trade representative as well as Sergio, the US ambassador designate to India. Apart from the meetings with the US government representatives on the bilateral trade matters, the delegation had discussions with key US-based businesses and investors on promoting trade and investment between India and the United States. In fact, the delegation had a constructive meeting with the US government on various aspects of the deal. Both sides have exchanged views on the possible contours of the deal, and it was decided to continue the engagements with a view to achieve early conclusion of a mutually beneficial trade agreement. In fact, the meetings with businesses and investors evoked positive response, and the business leaders reposed confidence in the Indian growth story and expressed their desire to intensify their business activities in India. I think there is some bit of positivity again, Neeraj, that's coming in terms of the statement. 2 points here. The meeting not only with the government but even with businesses and investors, that has gone well. And two, they've said that they are looking at a possible contours of the deal where they will continue the engagement. They are wanting to achieve an early conclusion with a mutually beneficial trade arrangement. So yes, the conversations are going on. You're not seeing any distress in any of the commentary yet. Whether this aids markets or not is what we have to see.
Yeah, and Hiral, normally if the last 4 days hadn't happened, if this would have come last Friday, I think the markets would have ended in the green last Friday itself, because you take that optimism. But I just think until the clarity probably comes in, it'll stay this way. But Hiral is right, this is positive. I wonder if Sudeep Bandyopadhyay thinks about it that way. He's joining in on the show with his vast experience on the fundamentals. Sudeep, thanks so much for joining in, and a great time to have you, right, Sudeep, because there's so much happening. Make sense of it for us. We've seen the carrot and the stick approach at perfect display here from the US.
It's more of a stick, Neeraj. I don't think where the carrot is coming. We are hoping for the carrot to come in somewhere. At this stage, it's only stick. That's what I can see. And I think, we have to be prepared for this kind of volatility during the current administration's time. So markets and all of us needs to be prepared for this. I think that's one lesson we all are learning the hard way. FIIs, foreign institutional investors, I'm sure they're confused, and they are also a little bit of getting into a risk-averse mode. They are kind of selling in India, and that selling is not stopping. That's not good news for India. Of course, we have the resilience in terms of domestic flows and things like that. But in spite of that, I think this selling is affecting Indian markets. They are putting money in IPOs, but I think, net they have been selling and selling in a big way. So we have to kind of digest that and continue. The pronouncements which are coming, yesterday we did see on the Pharma, while the primary impact may not be that much, there can be secondary and tertiary impacts, assuming they go through with this. So I'm a little worried about the CDMO players because there can be some tertiary impacts on them. So I think we have to be nimble-footed, we have to be careful, and we have to be a bit cautious in taking exposure to companies and sectors which are exposed to US markets.
Just with regards to sectors that are exposed to the US market is what Sudeep has to say. But let's quickly look at some of the stocks that are buzzing in trade today. From a REITs to a Supreme Petro, BHEL, REC. Vansh joins us with all the details. Vansh, what do you have for us?
Yes, so let me start off with REITs. Now the company has received an LOA worth rupees 153 odd crores. Now the order is from the South Africa Stelis Logistics, and the order is to supply diesel electric locomotives. And if I talk about the order book, now the order book as of Q1 FY26 stands at about 8,800 odd crores. Second on the list is REC. Now the Department of Investment and Public Asset Management has not agreed to the proposal of formation of a JV between REC and BHEL. Now the proposition of the JV was announced in March 2024, and it aimed at jointly developing utility scale renewable energy projects across India. And the third one on my list is Supreme Petrochemical. Now the company has commenced operations of its 2 new lines at Amdoshi facility. Now the 2 new lines are capable of producing 20,000 tons of compounded ABS. Now if I talk about ABS, it is a very important chemical, which is a chemical compound in plastics and manufacturing industry as well. And the compounded ABS have applications in automotives, electronics and structural applications as well. So these are some of the stocks that are buzzing on these developments.
Okay, thank you so much for that, Vansh. In fact, Kunal, let me come to you on these names. These are the newsmakers of the day. Yes, stocks have cooled off on the back of the market correction that's happening right now. Does anything interest you where you're seeing strength on the charts?
I think SPL, Supreme Petro, looks interesting on the chart perspective. It is on the technical front, it is worse on the falling trendline breakout, and we have already seen volume-based buying in the stock from the lower levels. The recent rejection zone of 840 has been surpassed, and that will act as a support for the stock on the downside of 840. So any dips towards the support would be a good buying opportunity. The immediate hurdle for the stock on the upside is around the mark of 900. Once that is taken out, you can expect the stock to go towards 940, 960.
Okay, so that's with regards to Supreme Petro that we're talking about right now. In fact, let me go to Sudeep as well in terms of few of the other sectors which are buzzing in trade. We spoke about pharmaceuticals, in the first half of the show. IT as a sector also has been weak, and this is concerns that do stem in from the past, where we are talking about, guidance cuts. In fact, you have Accenture, which already reported numbers where the street is not really very happy on that aspect. Sudeep, your advice to viewers with regards to what to do with IT as a sector?
Well, we have been cautious on IT, Hiral, for quite some time, and we believe that, with the AI coming in, the US corporates, large corporations will probably insist on use of AI for simplification of tasks. That directly and indirectly affects Indian IT companies because their margins will come under pressure. None of them have their own AI tools, and they will use third-party tools to deliver efficiency and at a margin which will be lower. And this trend will continue in the foreseeable future. In view of the above, even before H1B issue came up and the entire cost escalation issue related to H1B hit us, we were cautious and we maintain our cautious view. I think H1B, they still can manage, but this AI-related disruption will be difficult to manage from the margin point of view for most of the Indian IT companies. Now, particularly the large-cap IT companies, one needs to be careful. I mean, they're efficient companies, they're good companies, but the margin pressure is going to be real. The other factor which we are considering carefully is some of the mid-cap IT companies. Look, I think there are segments of the market which is growing disproportionately better. Let's say travel and tourism. World over is booming. So let's focus on travel and tourism related IT companies. So RateGain Technologies, and we can Coforge. We can keep naming some of these companies. And I think there is a potential for these companies to continue to do well over a long period of time. Similarly, there is a transition happening in automobiles from ICE to EV. Now, this transition requires a lot of technological support, and some of Indian mid-cap IT companies are very much involved in this transition and providing that technology support for the automobile industry. Let's say Tata Technologies, Persistent, and many others. So let's focus on these niche companies catering to segments which are booming.
Sudeep, just a follow-up here though. A rising tide will carry all boats along with it. Similarly, a falling tide, no matter how strong the boat is, will bring that boat lower, right? So could it happen that if the IT sector valuations themselves are coming off lower, then even the good niche opportunities will not really have gains? Because let's face it, some of the names that you mentioned, are not trading cheap. Persistent trades at expensive valuations.
No, I agree with you, Neeraj. There will be negative impact when there is negative news flow on the industry. But still, I think the opportunities do exist because the rate of growth in these segments will be significantly higher compared to other general IT service providing companies. So that's my point. Yes, you have to be cognizant of the valuation at which you are buying, and you need to be careful. But look at the opportunity under which this particular company is operating, and if the opportunity size is significant, maybe worthwhile taking exposure from medium to long term perspective.
Okay, fair call. I think we've already heard on the technical side, on the tech space, that those stocks are looking wobbly. Maybe we'll take Kunal's view on the stock on which we are doing the bull versus bear segment, and that's Larsen & Toubro. In a day like this, or on a day like this, its stock is up more than 2% off the highs of the day, but still trading well. Anushi Johnson with both the bull and the bear argument. Anushi.
Well, thanks for that, Neeraj. So, the bull case scenario is particularly strong today for L&T. Now, what's happened is that the company has formally put it out that they've exited the Hyderabad Metro Rail Phase 1 project. Now, a couple of reasons as to what has led to this exit. But, with this exit, now the state government has taken up this project in particular. And this is with a debt amount of around 13,000 crore that we are looking at. Now, with this exit, the state government also, has given L&T an equity investment of around 2,000 crore or so. This was L&T's equity investment share that we are looking at. But what led to this decision? In fact, what we are seeing is that the net loss from this project had widened to about 629 crore. This is as of the FY25 number that we are looking at, which represents about 4% of their overall PAT for 2025. So it was leading to that particular drag. So with this now going away, analysts are seeing it in a better light. In fact, this along with now higher debt also coming off for the picture is a positive that we are seeing. So in fact, there was an interesting note also from GM Financial wherein they're seeing about a 4% of a EPS accretion since this project is no longer in picture. But however, on the bear case scenario, I just want to talk a little bit about the macro side of things that are panning out. Now, in the recent news, we've seen GST rationalization, most of these rate cuts taking in place, which would have some kind of an impact in terms of where the government capex is for this particular year. So with the government capex slowing down, the main question arises, what would lead to the order intake, for a company like L&T for FY26 or 27. So do keep this bear case scenario in mind as well. Coming to the next bull case scenario, if we are seeing, now, if you look at the order inflows that have continued to remain robust for L&T. In fact, the order inflows were about 94,450 crore, up 33% in the first quarter itself. The company boasts an order book exceeding 6 lakh crore. So there's no doubt about, what's the kind of projection in terms of what's happening with the order growth, especially from the international side of business that we are looking at. However, what remains on the bear case scenario is the order execution, especially for large pipeline projects that we are looking at, which has led to some bit of that EBITDA margin compression before. So that's the bear case. Quickly moving on to the last point, it's about the management reiterating the FY26 guidance. This is in terms of revenue, EBITDA, as well as orders that we are seeing. So that remains on a positive. However, Q1 EBITDA and margins did miss estimates in the first quarter. So upcoming quarter's performance remains the key here. So this is the overall bull and bear case scenario that we are seeing for L&T.
Yep, the bull scenario looks positive for now. It's just that the market overhang keeps gains curtailed. Thanks for that work, Anushi. Kunal, standing up on a day like this, what would you do with the Larsen & Toubro?
I think definitely we have a positive view on the stock. So we expect the stock to again surpass its all-time high levels. As I mentioned, that it is one of the pick what we see in the very short-term perspective. And 3,700, which was the resistance zone for the stock, where there were multiple rejection. 4 times the stock has rejected on this technical front, one in January 2025, then June again 25, and again it was rejected in October 25. So now again we are seeing this momentum coming back into the space, and we can see this up move coming in towards 3,900, 4,000 is what we are expecting the stock to go in the next 1 month.
Okay, so 4,000, and I think Neeraj, a move like that on L&T with good volumes coming after very long, and I think there was a JM Financial note as well that Anushi was indicating a 4% EPS impact on the positive side, which is pretty strong.
Yeah, it is very strong, holding out for now, and multiple cues out there, right? Multiple reasons for Larsen to do well, maybe. The question only is, does the market allow a strong name like Larsen to hold out, and will it just be that? Sudeep, is it an investable option right now, Larsen, or as your overarching view was that the markets may be under a bit of a cloud and therefore be very selective?
Absolutely, Neeraj. In fact, I have been positive on Larsen for a very long time, and I've been mentioning this, that the Telangana Hyderabad Metro was a millstone around its neck, because every quarter, every financial year, you would have seen the hit coming to the P&L on account of this. Now, this getting out of the way, I think things will improve significantly. Otherwise, everything is working in favor of Larsen and Toubro. Massive order book, continuous order inflow, significant gain in West Asia. And, remember, international projects are with higher margin. So the margin profile of the entire company itself is changing. They've got rid of a lot of unrelated assets. Working capital management has become much better. So definitely Larsen, from a long-term perspective, deserve a much better valuation. Today's up move is because of that exit from the Telangana Metro Rail project. And that's good for the company. But otherwise, also fundamentally, it does look good from a long-term perspective.
Okay, so that's with regards to L&T. But moving on, the segment that everyone waits for, we have the chatter from the dealing room. Somit Sarkar joins us to tell us what's happening today and what is it that he's hearing. Somit, what are you finding out today? What's the chatter in the dealing room looking like with the markets trading at the day's low?
Well, not much of an action that we are seeing in dealing room in trade today, given the sharp fall that we have seen in markets. Not many stocks are being actually bought into. Firstly, a few stocks, however, what I've managed to gather firstly is Chennai Petro. Dealers indicate that there are buy flows on large HNI desks. Dealers are also indicating that there's an uptick in the gross refining margin, which was subdued for quite a while. So this has turned around, and GRMs are now trading around $4.5 per barrel from what we had seen previously. So this uptick has led to some buying interest when it comes to Chennai Petro. For Bharat Forge, dealers are indicating that there are some buy flows at lower levels. Dealers are expecting some more passive flows to come in later in the trade today or in Monday as well. When it comes to Bajaj Finance, there are sell flows on DI desks. Dealers also indicate that the Q2 update could be a bit weakish for the company, and hence they are seeing this sell flows coming in. And lastly, when it comes to AB Capital, there are buy flows on FI desk at lower levels when it comes to AB Capital. That stock dealers believe is cheaply valued and could see a turnaround going forward. So keep an eye out for AB Capital as well.
Okay, so that's Chennai Petro, Bharat Forge. That's an interesting one because buy flows coming in at lower levels, and there could be some passive flows that could come in on a Bharat Forge as well. Bajaj Finance, in fact, that stock is very interesting because the expectation is a weak Q2 update that could be coming in. In fact, let me take this question with Sudeep. Sudeep, chatter is saying that Bajaj Finance, there are sell flows coming in on the DII desk, and the indication is of a weak second quarter. You track this space also pretty closely. How would you look at a Bajaj Finance? Anything that you would want to add?
Well, not at this stage. I think pretty much the news which is coming out, or the speculation around the fact that the quarterly numbers will be weak, I think the credit demand was a bit weak. We know the GST cut announcement and implementation, there was a gap. So consumption demand slowed down during that period remarkably. Also, this was a monsoon month. So again, consumption demand was slow, which does affect Bajaj Finance credit demand directly. Apart from this, I think the asset quality challenges have reduced, but they are still there. So overall, we are expecting not a very exciting set of numbers from Bajaj Finance, and their business update will probably kind of show that.
So that's something we should watch out for as well. But thank you, Sudeep, so much for joining us on the show. We'll quickly slip into a short break. On the other side, we'll get you the top story of the day, where the Supreme Court has deferred Vodafone Idea AGR plea hearing to the 6th of October. My colleague Danish will join us to tell us more. Please stay tuned.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
To almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
Welcome back. You're watching India Market Close on NDTV Profit. Markets continue their downward pressure. Let's just quickly pull up India Wix because that has seen a good amount of spike in today's session. Cuts of 1% continue, but a 7% up move. And then that last 1 hour of trade is where that has happened. We've remained in that range of 10.7. Currently, we are at levels of around 11.51 on India Wix. That is clearly telling you that there is that nervousness and that volatility in the markets that is expected to continue as well. Another story that we should be tracking today, Navratra, which has revved up India's auto market from two-wheelers to passenger cars. Festive demand is breaking records. In fact, the trend which is interesting right now is your two-wheeler players are actually looking at the entry level passenger vehicle segment, and that's what I heard from the Maruti management when I spoke to them as well. But let's understand what the dealer checks are indicating. I have my colleague Puneet with us to tell us more. Puneet, over to you.
Well, thank you for that. It's definitely a very, very interesting period right now in terms of growth, and we're looking at Eicher Motors first because dealer checks are indicating 2x growth in the first 3 days of the festive period, and that augurs well for the company. They've also maintained a 30 to 35 day inventory as of now and is very well prepared to meet the demand as well. When you look at the other key aspects, the sub 2 lakh rupee pricing market is also breaking psychological barriers essentially for the consumers, where Eicher Motors was always seen as a premium. So it's now, because of the GST rate cut, the 350cc and below bikes have now come below 2 lakh rupees, and that is a key benefit as well to the consumers. Apart from the 12 to 24,000 direct discount, the dealers are indicating that a lot of consumers who would largely be absent earlier are now walking into showrooms and inquiring about the products as well. Phillip Capital also said that they're actually seeing inquiries up over 22% in this particular time frame, while the telephonic inquiries have also gone up as well, including the web ones as well. Finally, they're seeing top models like Classic and Meteor also being a key booster, and the conversion rates is also very quick because it's gone from 50% earlier to 65% now. So all factors positive for Eicher Motors. The other one's Hero MotoCorp. They're noting a 45% year-on-year growth essentially in the first 3 to 4 days of Navratra. That's also buoyed by the GST rate cut. The other aspect is that a lot of consumers are also starting to get aware of the GST rate cuts, because a lot of consumers for Hero MotoCorp are in the rural tier 3 and tier 4 cities as well. And once they're starting to walk in, word of mouth is helping this as well. Finally, in terms of Tata Motors as well, commercial vehicle segment, that has seen GST rate cut of 28 to 18%. While the benefit for CV makers is slightly lesser, this is a boost because e-commerce companies are also seeing a boom right now, and the demand is led because of trucks from them as well. Apart from that, Phillip Capital has also mentioned that they've experienced a slight market share loss in the small commercial vehicle space, both from the organized as well as from the unorganized space. So this will be a key booster, and the estimate is a 5 to 6% growth as well. We also had, Maruti today, where they mentioned 18,000 bookings a day is what they're getting versus 10,000 earlier. So it's not just the bike segment, the car segment is also getting a boost. So overall, multiple positive developments in the first 3 to 4 days of Navratri. Even though we've had an absence of 21 days of sales, the last 9 days will likely make up for it. And we could be in for a very, very interesting month on 1st October when this data comes out.
I think after the start of the GST 2.0 reform from 22nd of September, we are seeing a very good response. In our showrooms, on average, we are getting close to 80,000 inquiries daily. And we have almost now retailed 80,000 vehicles in the first 4 days of the Navratra. So that's a very good sign. And what we are seeing is the response in the small cars, typically the vehicles which are in the 18% GST slab. The response is further, I would say, better than the vehicles which are there in the 40% GST.
Following a significant cyber attack, JLR is now seeing signs of recovery. Key sections of its digital infrastructure are gradually coming back online, and a comprehensive recovery program is in full swing. Danish brings us the latest developments on this. Danish.
Well, things are slowly limping back to normalcy for Tata Sons' own luxury car maker JLR. Well, the company suffered through a cyber attack, which was reported on 2nd of September. And since then, the company has been doing efforts to restore its systems, and twice it has been unlucky. But now, the company showed that from 1st of October, all the systems will be up and running and the production will also restart. Well, JLR told NDTV Profit that it is doing all the efforts to ensure that everything is back to normal soon. They told NDTV Profit that a particular financial system is up and running again, by which the company is now able to clear the backlog of vendors and other stakeholders. Similarly, this particular system is again restarted, and through this, the company is also able to sell and register cars. And let me tell you that this was one of the primary reasons how we came to know that there was a cyber attack incident at JLR, as the company was unable to sell cars in the past few weeks. But now, all in all, if we see, sources have told NDTV Profit that from 1st of October, all the situations and all the systems will be up and running at JLR. And even right now, certain systems and certain IT infrastructure has been restarted, and the company is sure that in the coming few weeks, the things will get back to normal, and the JLR will be able to sell its cars and manufacture its cars as it was able to do a few weeks ago.
Well, so individual stories notwithstanding, the markets seem under intense pressure as we've established, and the indicative closing prices are not great either, and this is despite some slight positive commentary coming in on the negotiations, at least, even if we don't know the outcome. Just that very sharp pullback. Chakri Lokpriya, CIO equities at LGT Wealth, Johnson right now on the show. Chakri, if you had this option of sitting on some bit of cash, and maybe you do, but I'm asking that if you had that option, or if you still have the option, are you sitting on oodles of cash, or have you missed the bus already for sitting on cash?
Good afternoon. Thanks for having me. I think now is the time to have some cash. We're sitting probably about 4-5% of cash. This is an environment which is highly uncertain. is damned if you do and damned if you don't. If tomorrow they pair up and become friends again, and suddenly the market runs up, then obviously what we're doing is we're trying to rejig the portfolio away from tariff impacts, and also for slower earnings growth, because now it looks like basically there will be a round of earnings cuts.
Okay, yeah, and Kunal, Kunal, that's not a bad point that Chakri is making, right? It's a market wherein you're damned if you do and damned if you don't, because it is very volatile and uncertain. So, Kunal, when I hear you say that the markets may slide to a position of 24,500 or 400, which are key support levels, do you expect, looking at the current trend, for the market to have a bounce back, or do you believe that the mood currently is somber, and at those levels you see if it slides through those levels, or does it bounce back?
I think definitely. What we have seen that the India VIX has also bounced back from the lowest level. So volatility is definitely going to be there around this support zone. So 24,500, 400 is where we would start in the next week. I think on the opening Monday or Tuesday, probably you will have those levels tested. And probably from those levels, we need to see whether the market is able to sustain that level. We see some buying interest because Tuesday is again the expiry for Nifty as well. And that is where you will have a bit of volatility for Mondays as well as Tuesday's trading session. And if we are not able to hold 24,400 also post the weekly expiry, or you can say the monthly expiry, you will see that correction going on the downside. So I think volatility is going to persist around the key zones. We have already seen 5 days of decline here. So we might see one more day of decline there, which is where the critical support zone is. We might consolidate there, see some volatility of 200 points, maybe up and down. But good area where Nifty should at least stop, because all the indicators would be in the oversold zone. So there will be a stop, there will be a pause there. You might have some pullback, and then you can again continue this downtrend towards the lower level of 24,000.
With regards to strategy on Nifty 50, one stock that is under pressure since morning is Awari Energies. The US probe on the company, which is India's solar panel maker, is under US probe. In fact, customs are suspecting evasion of anti-dumping and countervailing duties. There are temporary restrictions that have already been put in place. The allegations, in fact, they've been accused of mislabeling Chinese origin solar cells as Indian, and the case is triggered by American Alliance for Solar Manufacturing Trade Committee. You did have Wari that came out with a clarification that US is an important manufacturing base and they will continue to cooperate in ongoing investigations in the US. In fact, they've gone ahead and acquired assets of Meyer Burger to further expand manufacturing in the US, and they're working in a steadfast manner to build manufacturing base there as well. In fact, from 1.6 gigawatt module manufacturing unit in Texas, they are looking to expand it to 3.2 gigawatts. Now, the question over here is whether their additional capacity that they're looking at in Texas, does that get questioned as well if anything gets proven in this kind of a scenario? Chakri, what would you look at in terms of where Awari Energies go? Because yesterday also we did speak to the management, and the commentary overall in terms of business was absolutely bullish. There were concerns that in the next 3 to 4 years, when a lot of competition that keeps coming in, there could be pressure. But now the entire US angle with the probe coming in, how are you looking at it?
In general, solar and US are not good words right now. One, there has been a complete de-emphasis on solar on anything renewable by the Trump administration. And on top of that, exporting or having operations in the US, where that is also a negative. On top of that, if this mislabeling is indeed true, so I think there are too many moving parts, and therefore would stay away from Awari Energy.
Wow. Yep. And the price damage has been strong. We of course try and get the management to talk about this, and I'm sure they will come and be open about it. Let's wait and watch how that moves ahead. It's had a good support usually at these levels, so bear that in mind. The other set of stocks which are falling today, and I wonder if they are good short candidates, because that's what the dealing room seem to be suggesting, are the EMS players, Amber, Dixon, etc. And Kunal, I wonder, you look at the derivative positions, you look at the charts, do you think there is a short trade? Amber, Dixon, Keynes, etc. They are not cheap stocks?
See, I think definitely if you look at the entire setup on specifically on Dixon, what I can see on the technical chart that there was a rising wedge pattern that has been broken on the downside with volumes. The stock has broken the 20 DMA. There was negative crossover as well on the momentum indicators, and now we have got that confirmation on the price as well. So I think more downside left for Dixon. The immediate support is around the 17,000 mark, which is where the first support is. And once that is taken out on the downside, we have a gap area which is around 16,250, 16,300 mark. So I think more from even from the current levels, you could see 1,000-point downside that could kick in for Dixon. 18,000 now continues to be a very strong resistance. Any pullback, even if you get on Monday's trading session, could be a good opportunity to initiate shorts on Dixon.
Okay, in fact, UBS has a target price of 32,000 on the counter as well. So that's what you should be watching out for Dixon Technologies. But moving on, one of the top stories of the day that we're talking about is a Vodafone Idea EGR plea, where the hearing has been deferred to the 6th of October. The cuts have deepened further on a Vodafone from a 6.5% to nearly 8% in trade. We have Danish who joins us to tell us more. Danish, what have you picked up so far?
But the top court has deferred hearing Vodafone Idea's plea challenging the additional AGR dues of 9,450 crore rupees by the Department of Telecommunications. Well, in today's hearing, A.C. Tushar Mehta, who is representing the government, he said that the DOT needs some more time on this case and hence he was seeking a deferral of this hearing, and the top court agreed to it, and now the matter will be heard on the 6th of October. But this is a very important case for Vodafone Idea because we all know the debt situation of the company, and any additional demand of AGR dues from the DOT side can really impact the entire financials of Vodafone Idea, and hence this is why Vodafone Idea had approached the top court earlier, and in the previous hearings Vodafone Idea clearly said that they really don't understand that how DOT can ask for more AGR depending on the previous few verdicts by the Supreme Court. But on its defense, S.J. Tushar Mehta had mentioned that the additional AGR dues are not over and above, but these are certain miscalculated errors in the financials of the company, and hence a new DOT demand was given to Vodafone Idea. But all in all, if we see, this is a very important matter for Vodafone Idea, and especially looking at S.G. Tushar Mehta's stance in the top court, in which we can clearly see that he's adjusting to the situation of Vodafone Idea. And moreover, the Indian government also holds a 49% stake in Vodafone Idea. So all in all, if we see, Vodafone Idea's hearing will now be done on 6th of October.
Thank you, Danish, for that. This has been a trader's favorite because on the day the Supreme Court agreed to hear the plea, that's the day when the stock saw some smart moves on the upside. And today, now that the plea has been moved in terms of the hearing to the 6th of October, that equal amount of gains that came in on that, they have been lost right now. Kunal, would you advise traders to look at this as a buying opportunity till the 6th of October?
Sorry, can you please come on the stock again?
Vodafone Idea.
Okay, so for Vodafone Idea, again, we have seen a sharp run up from the lower levels. The breakout was around the mark of 7.5, 7.4 zone, and we have seen a rally towards the 9. But again, there needs to have multiple confirmation. Now, since today is the weekly close, we have never seen the stock giving us a close above the mark of 8.5. And again, today the weekly close is going to be below that mark. So we need to have a strong close for the momentum to kick up toward the mark of 10 or 10.5 on the higher end. The support for the stock on the downside is placed around the mark of 7.57 zone. So I think it's stuck in a broader range. 7.5 is the support, 9 is the resistance. Till the time we don't see a breakout or breakdown on either side, you will have the stock consolidating in this broad range.
So that's with regards to Vodafone Idea. One interesting story that we're tracking, Neeraj, is what's happening with IT as a sector. When people thought that probably it'll start getting out of the woods, you have multiple headwinds that have continued to come in there. Latest was the H-1B visa. Post that, the commentary that we heard from Accenture as well. What Analyst indicated is that the commentary is not that weak, but it's mainly the guidance cut that is worrying the street right now. And taking that into consideration, look at a TCS, the stress that stock is going under. Only stock on Nifty IT, which is at a 52-week low. The biggest loser there, and 32% downtake, underperformed the IT index itself as well. I think let's understand from Jasmeet in terms of what that profit intelligence piece tells us on what's happening with the TCS, what's worrying the street, and what could be in store. Jasmeet, over to you.
Well, right, thank you for that. Let's quickly understand the stock performance. You see, the stock is nearly down 32% on a yearly basis versus Nifty IT, which is down 19%. And TCS is the only stock which is 52-week down. If you look at the market capital, it has deteriorated roughly by 5 lakh odd crore over the span of 1 year. Let's quickly understand what's happening with TCS and what's the street expecting. Now, if you look at the cautious signs, the company reiterates that the discretionary spends are still under pressure. So Q2 is something to watch out for. While they also see the CLSA comes up and says that they feel company to have incremental pressure on the overall margin going forward. That's another thing to watch out for. While they also see that the margins are under pressure given after the buyback announcement by Infosys, it creates a pressure on TCS and the other players also to have similar things in the downturn. Well, if you look at the JP Morgan's note, they expect margins to improve and a growth to be driven by from H2 onwards. So Q2 is something still under pressure expected from here on. While the overall, if you look at the additional impact of H1B visa is something also impacting TCS. Now, if you look at the way forward from here and a few positive signs for TCS, firstly, company is positive about the international market. As per the Q1 con call, they say they are positive on international market going forward. They expect it to do better in FY26 compared to the FY25 altogether. While also TCS majorly focused on financial services, and given the Accenture's result which came up yesterday, they saw a huge incline towards financial services. So that turns out to be positive for TCS. While looking at the other aspect, JP Morgan says that the growth expectations have bottomed out, and they also see a limited downside from here on. While they also make a note that the business model is not broken, so that's a positive sign. Lastly, we also say that the overall macro environment have not deteriorated further. So they have overall remained stable, while Q2 is something to watch out going forward. Now, if you look at the valuation, the stock is currently trading at a valuation of 22x, while it's a low of 5-year as well as a 10-year average. So the valuations are very cheap at this point of time. And if you look at the analyst, what they are recommending on the overall stock, we have buy almost at 33, while majorly is the buy rating. We have sell at 6, while hold have been maintained by 13 analysts. And if you look at the upside from here on, it stands at 26 odd percentage.
Yeah, well, and you Jasmeet, that's great research, and thanks so much for that. But you can't really keep tech out of news. And I think our guests have already said that, at least Sudeep has said that it was weak. And I don't think Chakri would have a different view either. Chakri at 52-week low, but I wonder if any of the tech stocks become an investment candidate as things stand, or do they become investment candidates at all? What's your view?
I think we'll continue to remain underweight IT because of the continuous negative news coming out. You know, the macro or discretionary spend in the US might have bottomed out, but the H1B kind of is a big dampener. While 70% of all H1Bs go to Indian IT companies, more or less. And so given that environment, margins will be hit. And you know, while valuations have come down, the earnings growth rate has also come down from, let's say, 2020, 2021, where it was about 15%. Now it's hardly about 5%. So against this backdrop, I think we will continue, unless tomorrow US wakes up and suddenly becomes there's a friendlier tone, then these stocks will run significantly. Until then, it's best to be on the sidelines.
Okay, so that's the view on the IT pack. Let's take Kunal Shah's BTST, STBT calls for Monday. Kunal, what do you have?
I think I'll go for the sell side. As I told at the start of the show, we are likely to expect Nifty to touch the 24,500, 400 zone in the next week. So here for me, sell is HDFC AMCs. So HDFC AMC again has a rising trend line breakdown on the stock. 20 DMA has been breached. The momentum indicators are in the negative crossover, and clearly we are seeing a good amount of selling pressure into the stock. So this is a sell for me from the current levels, or any bounce what you get into the stock even on intraday perspective. 5,700 should be your stop loss on the upside. Sorry, 5,720 should be your stop loss on the upside, and on the downside, I can expect the stock to go towards 5,400, 5,300 mark.
Wow. Okay. 5,400 to 5,300 from the current level. I think all of this, UTI AMC too, if I'm not wrong, was looking weak today. I think capital marketplace per se are not looking the best of plays right now. Remember, this can turn on a dime, but for now, it's not looking good. Chakri, I wonder actually, can this be the most obvious sector for a rebound. And the only reason I say this is because all through the last few months, wherein the returns have not proved to be great, etc., the Indian retail investors' inflow into SIPs has stayed steadfast, and therefore the ability of the AMCs to deploy capital, be the last port of call, and thereby have earnings, probably stands better than a few other uncertain sectors. Is that a wrong theory?
You have absolutely the right theory, Neeraj, because SIPs have continued to be continue to be strong. The inflows are strong. The realization that financial assets and the need to be in financial assets has grown for many reasons. For that purposes, I think the leaders will continue to lead, and therefore all these kinds of dip ought to be bought into. And that's where the volumes are, and they'll continue to see, further markets correct, you'll see further acceleration of SIPs.
Okay, further acceleration of sorts when it comes to HDFC, AMC as well in trade. The other thing that we need to talk about right now is also JSW Steel and the resolution that has come in for this one. In fact, the Supreme Court has upheld JSW Steel's resolution plan for Bhushan Power and Steel, quashing objections from ex-promoter Sanjay Singhal and sub-creditors. Let's actually get in my colleague Vishy to tell us more.
So the Supreme Court has actually upheld the JSW acquisition of Bhushan Power and Steel. Essentially what it has done is it has overturned an order that the Supreme Court had passed back in May of 2025. Essentially at that time, the Supreme Court had held that there were serious process inaccuracies in the way JSW Steel had acquired Bhushan Power and Steel under the Insolvency and Bankruptcy Code, and that these process inaccuracies were too big to ignore for the Supreme Court. So in May of 2025, the Supreme Court had actually said that the acquisition would need to be reversed and Bhushan Power and Steel would need to be liquidated. Today, of course, the Supreme Court has heard the review petition by JSW Steel as well as some other parties, including the Committee of Creditors, which had argued that the order was bad in law because some of the pointers that were made in the Supreme Court order originally in May were not actually accurate, and that the reversal of this transaction was not possible. So now, of course, the Supreme Court has held that order will now be junked, and JSW Steel's acquisition of Bhushan Power and Steel will continue as is. If you remember, back in 2019 is when the Committee of Creditors had accepted an offer by JSW Steel, a little less than 20,000 crore to acquire Bhushan Power and Steel. Later, it took till 2021 before the plan could actually be implemented and JSW Steel could acquire this company. The Supreme Court in its previous order had said that this was too long a period to implement the resolution plan, and therefore it needs to be reversed. Today, of course, the Supreme Court is saying that these delays were caused primarily because of a lot of legal objections and legal challenges that were raised by the erstwhile promoter of Bhushan Power and Steel, Sanjay Singhal, the CBI and the Enforcement Directorate, and that JSW Steel or the Committee of Creditors cannot be blamed for the delay that had taken place before the plan was, of course, implemented. Alongside that, the Supreme Court has also held that JSW Steel has actually infused equity into Bhushan Power and Steel as part of the resolution process. The compulsorily convertible debentures that were issued by JSW Steel have been held up as equity instruments, and that issuance of these instruments indicates that JSW Steel has actually infused equity into the company to protect it. What we also know from the order that was passed by the Supreme Court earlier today is that the objections that were raised by Sanjay Singhal have been quashed entirely. Objections that were raised by creditors as well. The financial creditors of Bhushan Power and Steel had said that they need to be given a share of the EBITDA of Bhushan Power and Steel after the resolution process was completed. The Supreme Court has held that cannot be possible. So all in all, an end to a pretty sordid saga. Over the last few months, JSW Steel was in a lot of pressure. Now, of course, JSW...
Vishy, I'll have to come in because the markets are just about to end, but thank you so much for this. But let's start wrapping up the markets because there's just 1 minute left. On a very weak day for the markets, we are ending about 2.5% lower for the week, which is not a good sign, with the mid caps and the small caps down over 3% a piece for the week. So it's not turned out to be a great week, and a lot of losses for IT, for pharmaceuticals and a few other sectors. The BSE 500 winners and losers list should come up on your screen because that will give you the whole story. Look at the losses here. Vodafone Idea, no decision or decision postponed, down. Or bullish positioning getting thwarted. HLE Glass Code, Laurus Labs, RT Drugs, Kaplan Point, IT and pharmaceuticals are essentially the two buckets which have gotten cracked the most. There are some winners. I mean, Larsen & Toubro a little bit. Some of the Tata Group, Tata Motors, Tata Investment, etc. Godrej Agro, 3%. But nothing too dramatic. In fact, the losses on some of the individual buckets, EMS for example, looked very weak. Dixon, Umber, Keynes and others had a deep gash. Like we said, a lot of pharma names had a deep gash. If you can just pull up the individual names once, then I think a lot of pockets had weakness. So just let's get the EMS players up on the screen. You can pull up a Dixon, pull up a Umber and a few others. And there was weakness personified on fairly stiff volumes out there. Keynes too down about 2%. We already spoke about Pharma, a lot of mid-cap or non-Nifty IT names as well. Persistent, Emphasis, etc. All of them had gashes to themselves. Pharma obviously was weak and therefore definitely looked weak. But mid-cap IT too, not the best of days. And the weekly performance, like I said, for Nifty, for mid-caps, small caps, not great. I mean, this is Nifty 50 intraday for the week. I think 2.3 up. I thought it was 2.54%, but 2.3%. So not great. Mid-caps and small caps nearly down 3% or slightly over 3%. Clearly showing that this week was completely anti what has happened in the past 2 or 3. Now, have we reached a place from where you can say that we'll bottom out? Maybe from a numbers perspective, 100, 200, 300 points more. But I think until the thaw is clearly evident, you might well see the markets gyrate with a bit of a negative bias. So keep an eye out for that perspective. But from all of us who put this show together and the shows through the week together at NDTV Profit, thank you so much for tuning in.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
To almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers, and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडी
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. First up, let's see how the markets have fared today. So benchmark indices ended with steep cuts for the 6th consecutive day, wiping out almost 2 weeks of gains. Now the Nifty and the Sensex fell about 1% each as Trump's fresh round of tariffs and heavy FPI sell-off demotivated the investor sentiment. Also, broader markets have underperformed the benchmarks by a significant margin, with the small and mid-cap indices ending over 2% lower. Infosys, M&M and ICICI Bank contribute most to the Nifty's fall. Now, while shares of L&T and ITC provide marginal upliftment, so all sectors have declined sharply, with Nifty IT, Defense and Pharmaceuticals leading the sectoral drag. In fact, all the constituents of the IT index have weighed by the global headwinds end in the red. Market breadth also ends highly skewed in favor of the declines, with over 1,900 stocks ending in the red zone. Now about the market picture from this week's perspective, viewers. Benchmarks have snapped a 3-week gaining streak. Now Tech Mahindra and TCS have fallen in the Nifty the most. Now Nifty Midcap 150 has fallen over 4% for the week. Nifty IT fell over 7% for the week, and with Coforge and Emphasis declining the most. So all the sectoral indices have fallen over 1% for this week. Now, viewers, US President Donald Trump has announced a slew of big new taxes on various items this morning. Now, these tariffs will start on October 1 of 2025. Now, they target drugs, trucks, kitchen items and also furniture from other countries. Now, Trump says that this will stop unfair foreign competition and also bring jobs back home. But experts warn that it could actually make things more expensive for everyday people. Now, the biggest hit is a 100% tariff on any branded or patented medicine imported to the US. Trump also says that companies can skip this tax if they build factories there in US, like breaking ground or also starting construction. So a 30% tax will hit the upholstered furnitures like sofas and chairs. Now, these come mostly from places like China, Vietnam, Mexico and Malaysia. So for heavy, that is the big trucks. So, think rigs over 10,000 pounds. Now, Trump has set a 25% tariff there. Imports from Mexico have tripled since 2019, hurting brands like Peterbilt and also Freightliner. Now let's see how the pharma sector, has performed today. So the pharma, exports body doesn't see much impact on India from the US proposed US tariffs. Now, according to the body, high quality and low cost is the strength of Indian generic medicines. Now, the body says that America has been saving a lot of money on generics for the past 10 years. In fact, it points that the United States has been saving almost $200 billion from Indian pharmaceutical imports. Now, as Trump has proposed to slam 100% tariff on the medicines, the Indian Pharma Exports Group hails Indian imports as a big cost-saving opportunity for the US that is now maybe being effectively scrapped. Now, on the other hand, Morgan Stanley says that Trump's pharma tariffs may not hurt most Indian firms as they focus on the generics. Now, Sun Pharma is an exception due to its exposure to branded specialty drugs in the US. Now, the firm notes that Sun Pharma has a US plant which may offer some protection there. Long-term impact is seen as limited, but short-term risk remains. Now, viewers, the Supreme Court today cleared the way for JSW Steel's 19,350 crore takeover of Bhushan Power and Steel. Now, this verdict ends the 6-year legal fight. Back in 2019, JSW's plan to buy the bankrupt steel maker was approved by the creditors, but delays hit hard due to challenges from the CBI and also ED. And Bhushan's former promoter, Sanjay Singhal, who was arrested for the fraud. So the deal only closed in 2021. Lenders have demanded a share of Bhushan's profits, arguing JSW's compulsorily, convertible debentures were in true equity. So the Supreme Court disagreed, calling CCDS equity instruments and also upholding the creditors' original plan, saying that courts can't override their wisdom. Now, this shuts down Singhal's objections and also lenders' claims, securing JSW's control. REITs has secured a significant international order and have received a letter of award worth 153 crore rupees from South Africa's Thales Logistics. Now, the deal is for the supply of the diesel-electric locomotives, which is a key export for the company. So this win further strengthens REITs' presence in the African market. Next up, we have Vari Energy. So it is under a US probe over alleged mislabeling of Chinese solar cells as Indian customs suspects evasion of anti-dumping duties with temporary restrictions now in place. Now, the company says that it will cooperate with investigations and also continues to expand its US manufacturing base. L&T is in focus, gaining over 2% in trade after announcing its exit from Hyderabad Metro Rail Phase 1. Now, the Telangana government takes charge of this project, offering a one-time settlement and also absorbing the debt. L&T steps away after years of losses and also limited support from the state. The company says that this move helps clean up its books and also refocus on the core areas. Paris Defence was in focus today as they have bagged a 34 crore international order from Elbit Security Systems Israel for electro-optic supplies. Now, the order will be executed between February to November 2026, adding to its robust order book. Paris Defence's order book has grown steadily over the years, which is now standing at 928 crore rupees in FY25 with a 2.5 times book-to-bill ratio. Viewers, JLR is also recovering from a major cyber attack with key parts of its digital infrastructure back online. Now, a comprehensive recovery program is underway, including efforts to clear supplier payment backlogs. Now, its global parts logistics center and also the vehicle processing systems are returning to full operations. The company says that it will update the financial impact of the cyber incident in due course. Next stock is Supreme Petrochem, which has commenced its operations of 2 new production lines at its Amdoshi facility in Maharashtra. Now, the new lines are dedicated to producing compounded ABS, which is a versatile engineering polymer. Now, the new facility will have an installed capacity of 20,000 tons per annum to meet the growing demand for compounded ABS in key sectors such as automotive, electronics, and also various structural applications there. Nomura initiates a buy on Titan with a target of 4,275 rupees, and they have cited a strong structural, story and also steady demand outlook. Now, Nomura believes that organized players like Titan are expected to grow 1.5 times faster than the industry, with headwinds largely behind. So sales and margins are resetting to new normal levels, and also a recovery is expected from H2. Nomura says that Titan is better placed than domestic peers on a risk-weighted basis. On to some more brokerage notes. Morgan Stanley turns more bullish on AU Small Finance Bank, hiking its target to 1,000 rupees, implying a 33% upside. Now it maintains an overweight rating, citing a strong setup post Q2 and also expectations of accelerating the loan growth and moderating credit cost. The firm sees metrics improving into FY27, and also AU Small Finance Bank remains its only overweight pick among mid-sized private banks. Global brokerage firm Macquarie has also released a new report on the Indian IT sector, identifying TCS as its marquee buy. Now, the firm's optimistic view stems from the strong performance of Accenture's financial services vertical, which grew at 12% year-over-year. As Indian IT companies have a high exposure to this segment, Macquarie believes that it will drive margin expansion and also pick up in the growth for the sector over fiscal year 2027. The Supreme Court gave the struggling telecom giant Vodafone Idea a short breather today in its long-running battle over huge government dues. So the company is fighting a fresh 9,450 crore demand from the Department of Telecommunications for AGR. Now, Vodafone says that this extra bill for 2016 to 19 ignores the past court fixes and also could sink the firm, which already owes over 70,000 crore rupees total, and also warns that it won't survive past 2026 without help. So Solicitor General Tushar Mehta, speaking for DOT, asked the bench led by Chief Justice B.R. Gawai for more time to sort a fair fix, noting that the government owns nearly half of Vodafone's shares after converting old dues to equity. Now the court has agreed, shifting the hearing to October 6 now. And let's now give you some information on the market debutants. Now, GK Energy has listed at 171 rupees on NSE, which is a healthy, 11.8% premium over 153 issue price, and also at 165 rupees on the BSE, up 8%. Now, the Pune-based firm's 464 crore IPO opened on September 19 and closed on September 23rd after being oversubscribed by 93 times. Now, the company is a provider of solar-powered farm pumps under the government's PM Kusum scheme. Now, investors cheer the green energy push, but watch for market volatility as the firm eyes more rural solar growth. Satwik Green Energy had a quiet stock market debut today, listing flat at 465 rupees per share on the NSE. On BSE, it opened at 460 rupees, down just 1%. So, from the ban. Now, the 900 crore IPO, mixing 700 crore fresh shares and also 200 crore from the promoters, have wrapped up after a strong subscription. Funds from the IPO will build a new 4 gigawatt factory, pay all the debts, and also grow its operations. Tomorrow, that is September 27, Prime Minister Narendra Modi will launch BSNL's massive rollout of over 97,500 4G mobile towers in Odisha. Now, over 92,600 of these towers have already been installed, use a fully indigenous 4G technology stack, upgradable to 5G. Now, these have been built by Tejas Networks for radio access, C-Dot for the core network, and integrated by TCS. Now, this network, part of the Atmanirbhar Bharat push, began trials in 2023 and now covers rural and urban areas, offering BSNL a chance of revival, with the private players like Jio and Airtel. Amazon has also agreed to pay $2.5 billion to resolve claims brought by the US government that it tricked millions of people into enrolling as Prime members and made it difficult to cancel. Now, a total of $1.5 billion will go to the refunds for customers who were duped into signing up for the service, according to the proposed settlement announced by the Federal Trade Commission. Initial claims for unemployment insurance were well below expectations last week, helping to douse caution at the Federal Reserve and also elsewhere that the labor market is in danger. First time filings for the week ended September 20 total the seasonally adjusted 218,000, down 14,000 from the prior week's upwardly revised figure, and also significantly less than the Dow Jones consensus estimate for 235,000. The Labour Department reported on Thursday. Bosch is set to cut 13,000 jobs as part of its plans to save 2.5 billion euros. Now, the engineering giant said that the losses in its mobility division in Germany, which provides vehicle parts and also software, came as a result of a stagnated market and pressure from the rival companies. The market has seen increased competition from the likes of Tesla and also China's BYD. Now, it also blamed increased costs arising in part now from US President Donald Trump's tariffs. The United States economy grew at a faster clip than earlier thought in the second quarter, with revised data underscoring its resilience despite headwinds from the trade policy and also slowing global momentum. Gross domestic product, that is the GDP, the broadest measure of the economic output, has expanded at an annualized 3.8% pace from April to June. Now, the Commerce Department said in its third and final estimate that is well above the 3.3% reported in the second estimate and the initial 3% figure. US President Donald Trump has announced a slew of big new taxes on various items this morning. Now, these tariffs will start on October 1. They target drugs, trucks, kitchen items, and also furniture from other countries. Trump says that this will stop unfair foreign competition and also bring jobs back home. But experts warn that it could make actually things more expensive for everyday people. The biggest hit is a 100% tariff on any branded or patented medicine imported to the US. Trump says that companies can skip this tax if they build factories here, like breaking ground or starting construction. A 30% tax will hit the upholstered furniture like sofas and chairs. Now, these come mostly from places like China, Vietnam, Mexico, and also Malaysia. So for heavy trucks, think rigs over 10,000 pounds, Trump sets a 25% tariff. Imports from Mexico have tripled since 2019, hurting brands like Peterbilt and also Freightliner. President Trump also signs an executive order approving the sale plan for TikTok's US operations. The plan actually moves forward to separate TikTok from its Chinese parent ByteDance. Now, a new US-based company will be formed, valued at approximately $14 billion. The order delays the TikTok ban enforcement until January 20th, allowing time to finalize the deal, line up American and global investors, and also get Chinese government approval. So the algorithm will be retrained and monitored by the US partners. Investors include Oracle, Michael Dell, and also Rupert Murdoch. Now, Trump confirms that the Chinese President Xi Jinping's approval for the deal. TikTok has 170 million users. On to some more global news. President Trump has took an aim at the booming chip industry to boost the US manufacturing and also cut dependence on the foreign suppliers like Taiwan. Now, under the plan discussed by Commerce Secretary Howard Lutnick, chip makers must balance imports with equal domestic production or also face tariffs. Exemptions could go to firms like TSMC, Intel, and also Samsung if they ramp up the US factories. Now, this addressed national security worries as America relies on overseas chips for everything from phones to missiles. But this could actually, also raise costs for the tech giants like Apple and Dell, who may now track chip origins closely. And the Trump news continues. Donald Trump welcomed Pakistan's Prime Minister Shehbaz Sharif at the White House. Now, this meeting, timed with 80th UNGA, follows a July 2025 trade deal cutting the US tariffs to 19% on Pakistan goods. Relations had cooled due to past tensions with India. But Trump's praise for Sharif's role in India-Pakistan peace talks and also a recent $600 million, US aid pledge for flood recovery sign ALS as a shift. Now, with India's Russian oil buys straining its US ties, Pakistan's strategic value grows. So the two leaders have discussed counterterrorism and also regional stability, aiming to deepen this newfound friendship. Britain is introducing mandatory digital ID cards starting with new workers aiming to curb illegal immigration. Now, the scheme requires anyone beginning a job or renting a home to show a digital ID on their smartphone, which is verified against a central government database. Now, Prime Minister Keir Starmer calls this as an enormous opportunity to secure borders and also make illegal work harder. Now, the ID dubbed the Brit card will become available to citizens and also legal residents by 2029. Now, critics warn about privacy and also civil liberties risk, while supporters say that it will just simplify the access to services and also reduce fake documents used for employment and housing. On to some more global news. Elon Musk's XAI has filed a lawsuit against OpenAI, accusing it of stealing trade secrets linked to its chatbot Grok. Now, the suit claims that ex-employees were hired to access confidential data. OpenAI denies the charges, calling it part of Musk's ongoing harassment. The legal battle adds fresh heat to the AI race. The Tirupati Laddu scandal has a fresh update. Now, the Supreme Court heard the CBI's urgent plea and also quickly stayed the High Court's critical order, giving the agency relief and also pausing any sort of halt to the probe. So things heated up in July 2025 when the Andhra Pradesh High Court slammed the CBI, saying that the director broke Supreme Court rules by letting J. Venkat Rao, he was an officer not officially on the SIT, lead parts of the investigation. So the High Court ordered a fresh rule following probe to protect, the case's sanctity. But Justice Gawai asked plainly, if the SIT wants to appoint a special officer, what's wrong with that? Stressing that the CBI hadn't abandoned the case. Viewers, the Russian origin MiG-21 fighter jets, which have been the backbone of Indian Air Force combat fleet for over 6 decades now, took their farewell flight in Indian skies on Friday at the Chandigarh Air Force Station. Air Chief Marshal A.P. Singh flew the last sortie of the squadron with the call sign Badal 3, a spectacular display by Indian Air Force elite skydiving team Akash Ganga bedazzled the Chandigarh sky today as the jets descended from a height of 8,000 feet with the majestic flypast of MiG-21 aircraft accompanied by precision of the Air Warrior drill team and also an aerial salute. The Supreme Court banned the sale of any crackers in Delhi NCR, including green crackers. Now, the Apex Court allowed certified manufacturers to produce green firecrackers in Delhi NCR in the region. Now, the court also directed the centre to work with stakeholders and also present a solution on the ban on sale and also storage of firecrackers in Delhi NCR by October 8. With that, viewers, it's a wrap on this edition of our Market Express, but please stay tuned to NDTV Profit for more news and updates.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
To almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to have a discussion that's not very objective, because he's the one who's more data, numbers and objective driven at times.
Sometimes I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडी
The Nifty and Sensex snapped the 3-week gaining streak as H-1B visa and tariff wars weigh on the market. All sectoral indices fall over 1% for the week. Mid and small cap indices lose more than 4%. GK Energy makes a lukewarm debut as it listed at 12% premium on the exchanges, while Sattvic Green Energy makes a flat start on the street. President Trump announces 100% tariffs on imports of branded and patented pharma from the 1st of October, spares generics. India braces for the impact as stocks of pharma companies drop over 2%. Wari Energy loses over 6% after reports of US government investigating the company for solar tariff evasion. Management says the company will continue to cooperate with the investigations. The Supreme Court clears the final leg of hurdles in the Bhushan Power and Steel case, giving full backing to JSW Steel's resolution plan. The Supreme Court asked the centre to take a decision on revising the absolute ban on manufacture of firecrackers in Delhi NCR after holding consultations with all stakeholders. In the meantime, the court allows certified manufacturers of green crackers who have the permits to manufacture them. MiG-21 fighter jets retire after 6 decades of service at a mega event in Chandigarh. Defence Minister Rajnath Singh calls it a proof of India-Russia ties. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, I'm going to bring you the latest in markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. The Nifty 50 and the Sensex ended lower for 6 sessions, and this is posting the worst week since March. On a weekly basis, the Nifty 50 and Sensex snapped a 3-week winning streak. All sectors also ended in the red. My colleague Puneet now joining in with a more detailed wrap of all of the market action. Puneet, over to you.
Well, it was a tough session to say the least. The Nifty broke down from the 24,700 level. We saw some key losers in the session today as well, and that is the story of the week as well. Continuous pressure throughout the week, with the Nifty ending almost 2.6% down for the week. For Friday today, the Nifty's ended below 24,700. It was a session where during the day we spoke about 24,900 as the key support level, but by the end of it, we had broken 24,800 and then 24,700 as well. Stocks like Mahindra & Mahindra as well as IndusInd Bank were the top Nifty 50 losers for today, and those gave up the gains, while the mid-cap and the small-cap index, both of them were down over 2% each. In terms of sectors, the Nifty IT and the Nifty Pharma were the biggest losers essentially in terms of sectoral mix, and Pharma did get impacted because of the comments that came from President Trump. He's put on a tariff essentially now on patented drugs, and while it does not impact Indian pharma companies, it still had a sentimentally negative impact because of that. When you look at for the week, the Nifty has pared its 2-week gains in this particular week, with the Tech Mahindra and TCS falling the most for the Nifty in this particular week. Tech Mahindra is down 9%, TCS is down 8% for this particular week, and TCS has seen the biggest weekly loser essentially in the last 5 years essentially in this particular time frame. So definitely a stock that hit 52-week lows today as well. Amongst others, the small cap 250 has fallen 4% in this particular week. Kaplan Point and Avanti Feeds fell the most, while the mid cap as well continued to be under pressure. That one is down as well in this particular week. The Nifty IT for the whole week is down 7%, largely impacted by the stocks I just mentioned. Nifty Realty, Pharma and IT fell over 5% each for this particular week. Overall, going into next session, we will be needing a lot more supports, and we might find those as well. But ending this particular week on a very weak note, to say the least.
Absolutely, Puneet, and the proof is in all the sectors ending in the red. And as the US is set to impose a steep 100% tariff on branded pharmaceutical imports starting October 1st, this spells trouble for India, with the American market being the biggest revenue driver for drug makers like Sun Pharma. Now, my colleague Varsha has more details on how this could impact the sector. Varsha, over to you.
Yes, US will impose 100% tariff on branded and patented products and not on generics, because India is a hub when it comes to generics, pharmaceutical exports. So these tariffs are not on generics. Now, the tariff will also not apply to companies who already have manufacturing plants in US or some of the companies who are building manufacturing plants in US. So the tariff would be exempted. Now, which companies will be impacted? One is Sun Pharma. Why? Because they have a specialty portfolio, like Illumia. So almost specialty portfolio contributes 19% to their overall revenue. Now, onto the facilities of Sun Pharma in US, they do have one facility, but they do not disclose how much contribution US facility contributes to overall revenue. But in Q1 FY26 con call, they did say that they're not going to invest more capex into US facilities, because Indian domestic plants capacities are enough to cater to all the US products as well. Now, why today, if you see, despite only tariffs on patented drugs, why whole pharma sector will be under pressure? Because if Trump can impose 100% tariff on patented drugs, investors are of concern that he may tomorrow impose tariffs on generics, and that's the uncertainty that lies ahead, and because of this, whole pharma sector will be under pressure. But do note that these tariffs are not on generics, and India is a hub when it comes to export of generics pharmaceutical products.
Right, Varsha, thanks so much for that. And meanwhile, India's pharma industry, like you rightly said, is facing serious tariff pressure after this particular announcement of 100% tax on branded and patented drug imports from 1st of October. We also spoke with Manish Sonthalia, Director and CIO at MK Investment Managers, and he highlighted that this could sharply impact companies, especially if the entire value chain, so I'm talking from active ingredients to finished medicines, come under the tariff net. Let's listen in.
I think all the four major tariff announcements today does impact India to some extent. Of course, the pharma being the largest component of the tariff, in today's announcement, there's some ambiguity currently whether, the entire value chain is going to get tariffed, or only the final branded formulation is going to get tariffed if it's not made in the US. So this would have implication for the CRDMO, CDMO, CMO companies. If the entire value chain is to be taxed, if the entire CMO, CRDMO facilities are not there in the US, if that is also going to be subject to 100% tax, then there is a wider impact. On the other hand, if the only final branded formulation is to be tariffed, then there is a limited impact. Of course, we also don't know whether specialty or complex generics are to be tariffed or not tariffed.
Meanwhile, markets continue to climb new highs even as concerns over the US tariff impact linger. Now, despite ongoing tariff uncertainties, there are no clear signs of a deeper slowdown in the American economy. This is the word coming in from Khun Go, head of Asia research at ANZ, noting that underlying economic indicators still reflect steady resilience in the US, with growth remaining broadly solid amid these mixed trends. Let's listen in for more insights.
The U.S. economy is still holding up pretty well. I mean, the upward revisions to Q2 GDP plus the real-time GDP tracking for Q3 is still indicating growth of around 3% and above. So there's no signs of a deeper slowdown in the aggregate U.S. economy. But I think this is where you have to really dig down into the details, because part of the strength of the U.S. economy is being held up by the AI-related investment boom. Now, this boom, while it's great for certain companies, and it's a key reason why U.S. equity market up to recently have been hitting all-time highs, it's not necessarily great for the labor market. And this is where, for the Fed itself, it's really the focus on inflation and the labor market. There's no doubt the labor market has been weakening. The downward revisions and the recent loss in job momentums point to that. So next Friday's payrolls number, assuming it comes out, if there's no government shutdown, will be the critical one for the Fed.
Now let's take a look at today's listings. We saw GK Energy closing nearly 10% higher after making a decent debut on the exchanges. The company listed at 12% premium over the IPO price, and the initial public offer was oversubscribed more than 89 times on the last day of issue. Meanwhile, Satvik Green saw a flat listing as the shares listed over the IPO price of 465 rupees. Meanwhile, Waaree Energy's shares plunged around 7% after it took the hit after the news of a US probe into the suspected tariff evasion. The case was triggered by a US solar trade group, and temporary restrictions are already in place. Now, Waaree has clarified that it is cooperating with the investigation. But for more on this, let me quickly go across to my colleague Varsha.
So yes, US has started an investigation against Waaree. The complaint is that Waaree took solar cells made in China and sold to US as if they were made in India, and because of that, a temporary restrictions have been put on Waaree. Now, if found guilty, it would be difficult for the company to sell their products to US, considering US as a huge market for them, because overall 20% of revenue comes from US and 90% of module exports go to US from India. Till probe ends, uncertainty will keep.
And let's quickly take you across to the briefing that's happening by the MEA's Randhir Jaiswal on US tariffs. Let's go and listen in.
विशेष जानकारी के लिए तो मैं कहूँगा कि जो संबंधित मंत्रालय हैं यहाँ पर, उनसे बातचीत करेंगे तो ज़्यादा आपको जानकारी मिल सकती है। कश्मीर के मुद्दे पे हम लोगों का बयान साफ है। हमारा क्या पोजीशन रहा है पिछले गत सालों में, गत दशकों में, उससे आप सभी लोग भली भांति वाकिफ़ हैं। जहाँ तक नॉर्थ साइप्रस की आपने बात कही, मैं आपका ध्यान आकर्षित करना चाहूँगा। जो विदेश मंत्री की मीटिंग हुई साइप्रस के फॉरेन मिनिस्टर से, उस पे ये बातचीत हुई और वहाँ पर आपका ध्यान मैं आकर्षित करना चाहूँगा कि विदेश मंत्री ने इस बात पर बातचीत की और ये कहा गया कि हम उस बात का समर्थन करते हैं कि एक कॉम्प्रिहेंसिव और लास्टिंग सेटलमेंट हो साइप्रस के मुद्दे पे, इन अकॉर्डेंस विथ द अग्रीड UN फ्रेमवर्क and relevant UNSC resolutions. Ravinder, coming to your question, first, the number of deportations that have happened from the United States. In the last several months, since January 2025, so far we've had 2,417 Indian nationals deported or repatriated from the United States.
Right, we'll try and get you more inputs coming in from Randhir Jaiswal, that briefing taking place. He, remember, spoke about the Prime Minister actually speaking with Russia and also the issue of the team returning after the high-stakes tariffs conversations in the United States. Let's move on to what's happening on the GST front. With GST revving up auto sales during Navratri, both the demand for four-wheelers and two-wheelers is breaking records. Maruti Suzuki's Partho Banerjee, we actually caught up with him to understand how the demand is looking and if the momentum will actually sustain. Let's listen in.
I think after the start of the GST 2.0 reform from 22nd of September, we are seeing a very good response. In our showrooms, on average, we are getting close to 80,000 inquiries daily. And we have almost now retailed 80,000 vehicles in the first 4 days of the Navratra. So that's a very good sign. And what we are seeing is the response in the small cars. Typically, the vehicles which are in the 18% GST slab, the response is further, I would say, better than the vehicles which are there in the 40% GST.
And in another big news coming in, the Supreme Court has upheld JSW Steel's resolution plan for Bhushan Power, dismissing objections from the former promoter Sanjay Singhal. The court emphasized that the final authority lies with the Committee of Creditors and that the plan's commercial wisdom cannot be questioned by the judiciary. Joining us now with more details is my colleague Vishwanath.
Acquisition of Bhushan Power and Steel. Essentially what it has done is it has overturned that an order that the Supreme Court had passed back in May of 2025. Essentially at that time the Supreme Court had held that there were serious process inaccuracies in the way JSW Steel had acquired Bhushan Power and Steel under the Insolvency and Bankruptcy Code, and that these process inaccuracies were too big to ignore for the Supreme Court. So in May of 2025 the Supreme Court had actually said that the acquisition would need to be reversed and Bhushan Power and Steel would need to be liquidated. Today, of course, the Supreme Court has heard the review petition by JSW Steel as well as some other parties, including the Committee of Creditors, which had argued that the order was bad in law because some of the pointers that were made in the Supreme Court order originally in May were not actually accurate, and that the reversal of this transaction was not possible. So now, of course, the Supreme Court has held that that order will now be junked and JSW Steel's acquisition of Bhushan Power and Steel will continue as is. If you remember, back in 2019 is when the Committee of Creditors had accepted an offer by JSW Steel, a little less than 20,000 crore to acquire Bhushan Power and Steel. Later, it took till 2021 before the plan could actually be implemented and JSW Steel could acquire this company. The Supreme Court in its previous order had said that this was too long a period to implement the resolution plan and therefore it needs to be reversed. Today, of course, the Supreme Court is saying that these delays were caused primarily because of a lot of legal objections and legal challenges that were raised by the erstwhile promoter of Bhushan Power and Steel, Sanjay Singhal, the CBI and the Enforcement Directorate, and that JSW Steel or the Committee of Creditors cannot be blamed for the delay that that had taken place before the plan was, of course, implemented. Alongside that, the Supreme Court has also held that JSW Steel has actually infused equity into Bhushan Power and Steel as part of the resolution process. The compulsorily convertible debentures that were issued by JSW Steel have been held up as equity instruments, and that issuance of these instruments indicates that JSW Steel has actually infused equity into the company to protect it. What we also know from the order that was passed by the Supreme Court earlier today is that the objections that were raised by Sanjay Singhal have been quashed entirely. Objections that were raised by creditors as well. You know, the financial creditors of Bhushan Power and Steel had said that they need to be given a share of the EBITDA of Bhushan Power and Steel after the resolution process was completed. The Supreme Court has held that that cannot be possible. So all in all, an end to a pretty sordid saga. Over the last few months, JSW Steel was in a lot of pressure. Now, of course, JSW Steel looking a lot more relieved.
Thanks for that, Vishwanath. And let's move on to another case that came up today in the Supreme Court. This is with regards to Vodafone that actually came up in the Supreme Court today. Vodafone Idea's fate in the long-running AGR dues dispute remains uncertain as the Supreme Court today postponed the hearing to October the 6th. Now, this delay follows a government request for more time to address fresh dues running into thousands of crores, even though the centre itself is an equity holder in Vodafone Idea. Now, the stock, meanwhile, closed nearly 6% lower after plunging to an intraday low of 7 rupees and 90 paise. My colleague Danish now joining us with all of the details.
But the top court has deferred hearing Vodafone Idea's plea challenging the additional AGR dues of 9,450 crore rupees by the Department of Telecommunications. Well, in today's hearing, A.C. Tushar Mehta, who is representing the government, he said that the DOT needs some more time on this case and hence he was seeking a deferral of this hearing, and the top court agreed to it, and now the matter will be heard on the 6th of October. But this is a very important case for Vodafone Idea because we all know the debt situation of the company, and any additional demand of AGR dues from the DOT side can really impact the entire financials of Vodafone Idea, and hence this is why Vodafone Idea had approached the top court earlier, and in the previous hearings Vodafone Idea clearly said that they really don't understand that how DOT can ask for more AGR depending on the previous few verdicts by the Supreme Court. But on its defense, S.J. Tushar Mehta had mentioned that the additional AGR dues are not over and above, but these are certain miscalculated errors in the financials of the company, and hence a new DOT demand was given to Vodafone Idea. But all in all, if we see, this is a very important matter for Vodafone Idea, and especially looking at S.G. Tushar Mehta's stance in the top court, in which we can clearly see that he's adjusting to the situation of Vodafone Idea. And moreover, the Indian government also holds a 49% stake in Vodafone Idea. So all in all, if we see, Vodafone Idea's hearing will now be done on 6th of October.
Thanks for that, Danish. And launched in 2007, Ixigo is one of India's earliest online travel platforms that use technology to revolutionize how we travel. Founded by IIT graduates Alok Bajpai and Rajneesh Kumar, the duo left successful careers in Europe to transform India's ticketing chaos into convenience. Our managing editor, Tamanna Inamdar, sat down with them on the latest episode of The Disruptors, where they opened up about their journey from battling near bankruptcy to making bold pivots that shaped their success. Let's listen into a snippet of that conversation, and don't forget to catch the full episode airing today at 6 p.m. and later tonight at 9 o'clock.
You start right before the GFC, global financial crisis. You do a pivot and then you have COVID come in. So I don't know about the other crisis, we'll learn about it through this interview. But you start off and then the global financial crisis hits. How does that work?
That was a crazy story. So I think we were 24 hours away from signing a term sheet. No, signing actually the definitive agreements and probably wiring the money in the bank, because all the other stuff was done already. And by that time, we were in that phase where you are thinking that, oh, you know what, you've made it big, you've raised a big round, and you are in that growth phase. So we kind of spend a lot of money on marketing, and we were almost on the verge of kind of running out of cash. And then the GFC happened. So one night before we were supposed to get the money in the bank, we get a phone call and the deal was off because Lehman Brothers had collapsed. And we just discussed, and then we said, what do we do now? So next day we went to the office, and to be honest, we had no idea of how to deal with that kind of a crisis, because it was the first time something like this had happened to us. So one of the things that we thought was that the best thing to do in a situation like this would be to be completely transparent with the team and just tell them what's going to happen. So we went to the team and we told, here's the situation. We'll probably run out of money in 2 to 3 months. And so we'll have to let go of at least half of you. And the team really appreciated the fact that they just thought that, we had answers to all the questions, but that's what people always think about founders, but sometimes they don't. And, when they saw us that vulnerable, that's when they kind of, rose up to the occasion, and they came back to us and said that, you know what, you don't have to do that. Give us some time and we'll figure out something.
Right, don't forget to catch that conversation this evening at 6 o'clock and later tonight at 9 p.m. Let's take you to what's happening with regards to Jaguar Land Rover. Following a major cyber attack, the company is finally showing signs of recovery. Key parts of its digital infrastructure are gradually coming back online and a comprehensive recovery program is actively underway. My colleague Danish now bringing us the latest developments.
Well, things are slowly limping back to normalcy for Tata Sons-owned luxury car maker JLR. Well, the company suffered through a cyber attack, which was reported on 2nd of September. And since then, the company has been doing efforts to restore its systems, and twice it has been unlucky. But now, the company showed that from 1st of October, all the systems will be up and running and the production will also restart. Well, JLR told NDTV Profit that it is doing all the efforts to ensure that everything is back to normal soon. They told NDTV Profit that a particular financial system is up and running again, by which the company is now able to clear the backlog of vendors and other stakeholders. Similarly, this particular system is again restarted, and through this, the company is also able to sell and register cars. And let me tell you that this was one of the primary reasons how we came to know that there was a cyber attack incident at JLR, as the company was unable to sell cars in the past few weeks. But now, all in all, if we see, sources have told NDTV Profit that from 1st of October, all the situations and all the systems will be up and running at JLR. And even right now, certain systems and certain IT infrastructure has been restarted, and the company is sure that in the coming few weeks, the things will get back to normal and the JLR will be able to sell its cars and manufacture its cars as this was able to do a few weeks ago.
Thanks for that, Danish. We'll of course continue tracking this and bring you the latest development. And before we go, it's a historic moment for the Indian Air Force as the MiG-21 takes its final flight. After nearly 6 decades of service, the Indian Air Force retired its iconic MiG-21 fighter jet, which took its final sortie in a decommissioning ceremony held in Chandigarh in the presence of Defence Minister Rajnath Singh. Let's take a look.
This is the end of an era for the Indian Air Force, one that has lasted over 6 decades. Today, the MiG-21, the most formidable of fighter jets, the hero of 4 armed conflicts with Pakistan, made its last flight, tipping its wings in a somber yet joyful salute to the generations of pilots it trained and with whom it flew into deadly dogfights. The legacy of the MiG-21, a Soviet-era fighter that should have been rendered obsolete years ago, will be that of a war horse that became synonymous with the country's Air Force, executing attack, defense, and recon missions for decades. Today, though, with over 300 crashes and aging airframes, the time has come for the MiG-21 to say goodbye and for the Air Force to welcome the homegrown Tejas, the veteran's replacement.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective, because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy.
Hello and welcome. You're watching Know Your Company, our special show on the NDTV Profit with me, Soumit Sarkar, and my co-anchor Puneet. Well, today the company that we have on KYC is Netweb Tech. So firstly, let's understand what are the key questions that we would want to know from the analyst and from the management when it comes to Netweb Tech. Firstly, whether the growth guidance that the management has given, is it sustainable? Now, earlier the management had guided for a growth of around 30 to 35%. So is that growth sustainable even for a longer period of time is something that we would want to know. When it comes to order wins, the company has announced mega order wins in this month, that is in September 2025. So what are the further order wins that we could see when it comes to AI infrastructure is also something that we would want to know from the management and from the analysts. How are they looking at? When it comes to its partnership with NVIDIA, how does this partnership helps the company? Does it help them does this help them secure more larger orders going forward is something that we would want to know from the management. And when it comes to what is the view of the analyst on the current valuations, given the sharp run-up that we have seen in the share prices, are the valuations sustainable at current level is also something that we would want to know from the analyst. And lastly, these two order wins that the company has announced will suffice growth or will suffice strong growth for the company till FY27. But what happens to growth beyond FY28? That is something that we would have to know from the analysts that will be joining today on Netweb Tech. But first, let's start with Puneet on what does this company actually do?
Well, definitely it's one of the most interesting ones because it doesn't actually have a direct peer, to say the least. It provides high-end computing solutions, which essentially means they do provide supercomputers for various applications in key industries, and we'll get to the industry part in just a bit. It deals in fully integrated design and manufacturing capabilities of these computing solutions, and because of that, the supercomputers have appeared 15 times in the top 500 rankings as well. When you look at the other key aspect, which is the key segment, and they divide that into 5 key operating areas. Computing is one, private cloud. These are the two main ones that we watch out for because that's almost 70% of the company's revenues. The third includes AI systems, and you'll see that the revenue is actually doubled over the last 2 years for the AI system category. It is a new one, to say the least, so we could expect some higher growth in this particular sub-segment. Fourth one, storage, and the fifth one is data centers. Now, data center actually has a huge applications. The company used to manufacture servers earlier as well. But because of the high growth segment in the first two ones that are mentioned on the screen right now, we've seen the contribution of data center actually be in just some low single digits as well. But that's largely the top 5 segments that Netweb Tech operates in. It's important to know which industries they cater to as well, because a lot of industries which require high computers and high super solutions as well are clients of Netweb Tech as well. So if you can look at the industry classification as well, that's the other one. We've seen space and defense be roughly about 28%. ITTS is the other one, which is the majority of the company share. Education and research as well, and the other enterprises is the other industry as well. It has a lot of clients, especially from the government side as well, that do cater into these segments that they operate in. But that's largely on this company's industry that they cater to. Very quickly, I just want to highlight, the other data for Q1. Revenue from repeat customers is roughly about 72%, and that because they are such high growth customers that you would have repeat orders from these ones. The other ones, 23 new clients that got onboarded across the industries in Q1. Pipeline is over 4,000 crores for the company because of the scope that it offers and no direct competition essentially as of now, at least in the listed space, with an order book of existing about 229 crores. So the difference between the order book to the pipeline is also quite sustainable and quite huge. So it could materialize at least in that space as well. They also had a recent order win of 415 crores. That's to supply Tyron AI GPU accelerated systems, and that we're going to talk about that with the analyst as well as with the management as well, and that's deployment of AI infrastructure as a whole. But that's largely about the company. We've told you about what we actually want to know from the analyst as well. But let's now look at the metrics, Sumit.
Well, yes, the first, there are total 8 metrics on which we are going to rate this company, that is Netweb. The first one would be income statement, followed by balance sheet, then the cash flow, how the return ratios for Netweb Tech, shareholding pattern, what has changed over the years, street cred means how the stock has performed over the last few time frames, how the valuation standing, what's the street coverage, and what is the outlook going forward for Netweb Tech. So based on these 8 parameters, we are going to rate Netweb Tech in the next 10 minutes. So firstly, when it comes to income statement, if you look at the company's income statement, the growth has been quite strong. 67% is the CAGR growth that we have seen over FY22 to FY25. For 65% similar growth coming into EBIT, and similar growth that we are seeing when it comes to net profit. Net profit CAGR growth has been around 73%, and over the last 3 years that we have seen, margins, if you look at the EBIT margins of the company, that has remained in the range of around 13 to 15%. So not much of a deviation, strong level of margin, strong growth that we have seen in the last 3 years. Now if you look at the first quarter performance, the first quarter of FY26 performance for Netweb Tech, on a sequential basis, yes, it has declined 27%. But then again, this business is largely dependent on how the order wins cycle are. And if you look at YOY basis, yes, again a strong growth is what Netweb has reported on a YOY basis. 102% growth in revenue, EBIT has increased by 141%, margins expanded by around 221 basis points to 13.8%. Net profit came in at around 30 crore, which is a jump, which is nearly double of what the company reported last year. So again, a strong growth on a YOY basis in the first quarter as well. So thumbs up that we are giving it when it comes to the income statement for Netweb Tech.
Well, balance sheet also likely has seen strength as well in this particular time frame. We've given this a thumbs up because if you see the movement essentially of the book value, just from roughly about 93 crores in FY23, the book value has now inched up to 530 crores in just the last couple of years. So it's definitely a key positive. In this particular time, the company has reduced its borrowing. That's helped contain profits as well. And the cash and bank has also increased to roughly about 222 crores in FY24. We saw a slight dip from those levels to 180 crore in FY25. But the jump essentially from FY23 compared to FY25 is so vast and so huge that it's a clear thumbs up on balance sheet metrics as well. Cash flow, Sumit.
Right. Now, if you look at the cash flow here, yes, the operating cash flow has come down. 27 crore is what we had seen in FY23, which has come down to negative 13 crore. But as a percentage of PAT also, it has reduced. But on a net basis, if you look at, the company has still been generating cash, given the fact that there are multiple other sources for the company to get cash here. If you look at the complete statement here, there are there are cash flows from financing and investing options as operations as well. So on a net basis, yes, the company has been generating cash. So on net cash flow, it has remained largely stable in the last couple of years, around 80-83 crore. However, given the fact that operating cash flow has reduced because of the increased number of receivables, we are giving it a neutral rating as of now.
Now, when you look at the other key metrics, which is return ratios as well, because that is the other important one. While FY23 was a strong year at about 47% in terms of return of capital employed, the reason we are giving this a neutral rating is largely to know what could be the stable run rate for the company. Is it going to be 28 or 25%, which we've seen the last 2 years? That's going to be one key question. On return on equity as well, when you look at the other metric, was roughly about 45% in FY23, FY21. FY23 saw a huge jump to 68%, but we've largely seen a stable 25 to 29% in terms of return on equity as well. So we've largely given this a neutral rating, being very conservative on our ratings, and that's largely because of lack of stability, if any, over the last 3 to 4 years. It is a high growth company, so we've given this a neutral largely because of that aspect and to know what could be the run rate going forward as well.
Right, and when it comes to shareholding, again a thumbs up that what we have given, because the promoter holding has remained largely stable over the last 1 year. FI holding has come down a bit, but again not much of a decline, just 100 basis points of a decline. DI holding has also declined by around 100 odd basis points, but again public holding has increased by similar number from 13% has increased to 15 odd percent, but promoter holding has remained largely stable. Again 70% plus promoter holding is quite positive when it comes to Indian companies, and hence a thumbs up that we have given for the shareholding part.
When you look at the street cred as well, and there's not too much to complain here, honestly, because just in the last 1 month, the stock's up almost 59%. When you also look at, longer time frames as well, essentially in the last 6 months, it's almost up 135% in terms of stock returns. On a year-to-date basis, we have seen some knee-jerk reactions, but still up 26% and largely outperforming both the Nifty as well as the mid-cap performance. 43% on a yearly basis. So this is no doubt we've given this a thumbs up. Very strong profile in terms of stock returns that the company is given in this particular point of time.
Right, and the outlook, what is the company expecting for FY26 and FY27? Now, firstly, if you look at the street coverage here, there are 3 analysts covering the stock, and all of them have a buy rating. In fact, one of them just upgraded the rating in the recent times, opposed the order win that the company had announced, and the average upside, that is the return potential for the next 1 year, stands at around 17%, which is again a reason for us to give a thumbs up to Netweb Tech.
Well, when you look at the outlook, and I'll also cover the valuation very quickly, because they have given a stable outlook, 35 to 40%, and Somit mentioned that if that is sustainable, we'll quiz the management on that as well. That's the key aspect. Apart from that, they've delivered 40% CAGR since listing as well in terms of revenue profile. EBITDA margin is largely maintained at 14%. So that'll be the other thing to watch out for if they are able to maintain their growth. The management has guided for that, but with the new orders in the India AI mission as well, that's going to be the other growth area for the company. When you look at the valuation aspect as well, very quickly, it's not cheap by any means or imaginations. On a price to earning basis, it's trading at 62 times, but that's also for FY27 basis. It's almost trading at 100 times in FY26 basis, and that's why in terms of the current aspect of PE, it is expensive to say the least. Even when you look at the EV EBITDA metric as well, that's largely expensive on that as well. So when you look at the overall rating as well, we'll pull that up very quickly as well, and Somit will take us through all of them right now.
Well, income statement is a thumbs up, balance sheet is a thumbs up again, cash flow and return ratio is quite neutral. So at least 2 out of 4 in the first page. Second one, again, shareholding thumbs up, street cred thumbs up, valuation is down, and street coverage is a thumbs up. So 3 and 2 around okay, it should be 5, and okay, 2 neutral is 1, so it's around 6 out of 8 is what the rating that we have given to Netweb based on this. Now let's get into our analyst on the show, Renu Bed, Senior Vice President Research with IIFL Capital. Ma'am, firstly to start off with, yes, the company has reported quite a strong growth that we have seen of late, but do you expect this growth rate to be sustainable even beyond FY28, because the recent order wins will lead to strong growth at least till FY27, but what beyond that?
Yeah, hi. the kind of orders that we have seen for the company, especially under National AI Mission, most of these are short cycle executable orders. And while these orders will be completed by the first half of 27, the further new orders should be recurring. So if you look, the total corpus under National AI Mission has been about close to 11,000 crores. And Netweb is pretty much confident that they should be able to garner at least 50% share, which implies 5,000 crores plus of revenue opportunity. So the current order 2 wins that they have announced cumulate to close to 2,100 crores. And just to that extent, we still believe that these are just 40% of the revenues that they are targeting. And the rest revenue momentum from new order wins should continue through FY 27-28. In fact, after these 2 orders in second half also, there should be a couple of more order wins, which will drive better visibility for fiscal 27. So in fact, in our revenue forecast, we have taken close to 1,300 crores of revenues from these NAIM orders in fiscal 26 and close to 2,300 crores in fiscal 27, including 1,500 crores worth of new order wins, which will be executed then. While the revenue numbers will taper down from 28-29, nonetheless, it will help better penetration of Netweb solution in India's AI infrastructure there.
Ms. Baid, very good morning to you. Thanks so much for joining in. It's Puneet this side. We've seen you also cover the EMS space very actively, so the high growth is not a concern. But largely, when you look at, in terms of revenue profile, you did mention, what would these new orders do for margins for the company?
Well, since these orders are not just for hardware, but for the entire solution, along with the Tyron software that they offer along on the platform. So to that extent, these are double-digit margin orders. One can contemplate that, yes, compared to the base run rate revenues, where they were earning almost 14% kind of margins, these, given the size and scale, would be at least a few hundred basis points lower. So we still expect that these projects should be between 10 to 11% margins for the company. So on a blended basis, it will not have a significant dilutive impact on the overall margin profile of the company. So we are forecasting about 50 to 80 basis point lower margin than what the company had guided for the base run rate business, which was 13.5 to 14% at the end of last quarter.
Right. I wanted to understand one thing. I believe by the end of the first quarter, their capacity utilization was around 65%. So post this couple of order wins, do you expect that utilization levels will increase and they might have to do some more capex on their front or some more hiring at their end?
So yes, they were operating at 65%, but that was on a single shift basis. SMT lines typically can run 24/7, so easily they can scale up to double shift and if required to third shift. Broadly, there might be some incremental capex of maybe 5-10 crores to debottleneck, add up some more assembly capacities for the servers, etc. But I would say on the capacity front, they are relatively better placed. And that's the reason why they have been able to take these orders with these kind of delivery timelines. So both not just on the SMT line, but also on the other manufacturing activities related to the assembly of the server, they are today well prepared. In fact, the server activities on the assembly side was fully commissioned at the end of 25 itself. So to that extent, they are well prepared to execute this kind of growth rate.
So just to conclude conversation, I just wanted to understand. So over FY 26 to FY 28, what is the kind of growth that you're expecting on revenue, EBITDA, and net profit front?
Overall, if you look in terms of numbers, clearly we are looking at 65% CAGR growth in revenues. Profit CAGR has been 40% plus. But if I look only in terms of AI-driven revenues under the AI mission, so those revenue numbers would be growing almost in terms of absolute numbers. They will add incremental 5,200 crores to the top line. And the base run rate in the AI segment will still be growing at 55% CAGR. So yes, there is a big pop-up, which is driven by these national AI mission orders. But yet overall, in terms of their growth profile, we don't see any headwinds. So from a profit number, which was expected this year to be close to 2.5 billion, we expect the company to really double PAT by 28 to close to 5 billion rupees. So clearly, PAT doubling in next 2 years from this year's expectations, and revenue also expected to quadruple thereon.
Right. Well, thank you for joining us and giving us your perspective on the stock that is Netweb Tech. Strong view coming in from IIFL Capital. Now, we also spoke to the management of Netweb Tech to understand how their growth plans or growth plans look like going forward. Let's listen into that conversation. AI segment used to be around 7% of your revenue a couple of years back, which has now increased to around 29% in the first quarter. Where do you see the revenue contribution coming in from this segment, say 2 years down the line, sir?
As I mentioned that, so our AI portion of our revenue continuing to be healthy, and it is, 25 to 30%. And all the missions pertaining to AI mission infrastructure capabilities are being reported and accounted, separately from the revenue segment that you generally see what we submit to BSE and NSE. So entire AI mission related revenue accounting and governance will be done separately. So I think for every such project pertaining to the AI built up is going to be seen as a separate account and separately reported to the market.
Okay, post this order win, what will be your capacity utilization at, I believe in the first quarter it was around 65% level?
Yeah, so when you talk about the capacity that we are building, right? As you know that we have our in-house motherboard manufacturing, server manufacturing, and all. So we will be delivering these orders in course of time, depending on our funnel or even the pipeline conversion basically happens into 6 to 18 months. That is the timeline that is there. So as and when these newer orders that are coming up, we will be fulfilled in due course of time.
Okay, and with this new order wins, will your revenue growth will be much more in FY26, FY27 than what you had guided earlier?
Yeah, so we will obviously, so with these larger orders coming in, obviously it is natural that our revenue growth is going to be much faster compared to what has been there in place, and we anticipate some more other orders which are there in the pipeline will also mature during the course of time. Yes, obviously this will translate to a better revenue as we move forward.
Right, sir. Just wanted to understand the tie-up that you have with NVIDIA. How does that help the company? Does that add more credibility and helps in securing orders faster?
So we have been working with all our ecosystem partners, from a very strategic perspective, whether it is NVIDIA, from the GPU server perspective, or AMD or Intel. Now, having said that, our relationship with NVIDIA is deep-rooted, while Netweb is one of the 6 global manufacturers of GPU servers based out of India. And we are the only one in India. So we do have the technology relationship with them. We get to understand their, the systems and the softwares that are required to leverage the underlying platform better. And that relationship really helps us to delivering outstanding capability much faster and time to market as they are launching their new generation solutions. And that is the way Netweb and NVIDIA works in tandem to help build these kind of solutions. By the time they launch their newer GPUs or newer software stack that is available on the Netweb built GPU servers as well. And that basically really helps. That technology association really helps us, making these solutions, bringing to the market faster. And that also convinces our customer about our joint value proposition and how that translates to their business success.
Well, that was the management of Netweb. You also got the analyst view in this particular episode, so you got the twin benefit as well. But thanks so much for tuning in to KYC. Lots more action on the other side. Stay tuned to NDTV Profit.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने.
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just...
I've heard of prison REITs in the
Prison REITs?
Prison REITs in the US.
No. How does the structure of the REIT get created?
It's still a small number, but from 6,000, 300,000 is a big growth. That's a wrong way of looking at it. Just looking at the dividend yield. September, third week of last year, you would have made a return of 36%.
Why was it beneficial for you to acquire assets in the SEZ?
We also got SEZ benefits.
Sure.
What you get, most of it is tax-free.
The jury's out on physical real estate as an asset class. We've had debates right here about it. Some people swear by it. Others say the acquisition cost is too high, to say nothing of the opportunity cost. But what about fractional ownership? What about real estate investment trusts? How do they work? And if they are meant to allow you to invest in real estate assets, why has the SEBI tagged them as equity? What are the tax implications? This is MoneyWise on NDTV Profit, and my name is Alex Matthew. Joining me in studio is the man with the answers to all of those questions, Ramesh Nair, the Managing Director and Chief Executive Officer of Mindspace Business Parks REITs. Thanks so much, Ramesh, for taking the time. Let me start with the most basic question. What is a real estate investment trust?
So, REIT is a pooled vehicle which invests in different asset classes. I work for an office REIT. We get rentals from the various clients who occupy these buildings. We deduct expenses. Then there is interest payments after that. And after that, we distribute the income to the various unit holders. So as simple as that, like a mutual fund invests in the equity markets, we invest in a particular asset class, in this case, office real estate.
Okay, so a number of questions already emerged from that one statement, right? You invest in office real estate. So the natural extension of that would be that there are REITs that exist that invest in residential real estate and that invest in the other type of real estate, which is retail, right? Which is malls, etc. So where do they exist? Do they exist here in India?
So in India, we have only 5 REITs. The first REIT came up in 2019. And since then, 5 REITs have listed. So 4 of them are office and 1 of them is retail. Between the office REITs, they own around 165 million square feet. The retail REIT is around 11 million square feet. Overall, when you look at the Indian market, we are talking of a market cap of around 1,50,000 crores with a AUM of around 2,25,000 crores. Compare that to US, where REIT as a product has been there since 1960. We're talking of a market cap of close to $1.9 trillion. Today there are like 1,000 REITs across the world in 40 different countries. Multiple REITs. So in US you would have rental REITs, they would have large data center REITs, there would be industrial and logistics REITs. I've heard of prison REITs in the
prison REITs
in the US. There would be resort REITs.
So the implication of that is that a prison earns money.
Rental income.
So it rents out to the state.
Yeah.
So it's privatized prisons that rent it out to the state, and the state pays a rent, and that gets distributed. Wow, yeah. I didn't even think of that. Okay, so but let's talk about the fundamental objective of a real estate investment trust, right? It is a vehicle that allows an individual to participate in investing in an asset that would otherwise be difficult for them to invest in. So we're talking about, especially we're talking about office spaces, it's very difficult for an individual. It's practically impossible to buy the same building that an Infosys is renting, right? Exactly. Whereas you will have IT service providers that are renting businesses or buildings that you own. So as a REIT, ultimately the primary cost for you is the acquisition of the building. Do you at all get into the building of buildings?
Yes.
The construction of buildings?
We do.
How does that work?
So from our point of view, we have a 37 million square feet portfolio. In that 37 million square feet, 30 million is ready. 7 million is actually under construction or under development, getting different approvals. So it's a mix of ready and under construction.
Okay. So, and who does the actual construction? You would contract a developer or builder, or basically in EPC mode, you would effectively get this done, right?
So we would typically partner with people who understand that. Here in this case, our sponsor, K-Rager Corp, has a very large in-house construction team, and we would give them a fee for constructing the buildings.
Okay. So, like I was saying, the primary objective then from the perspective of the REIT, first we'll talk about the REIT and then the individual, right? So the REIT ultimately is an entity that is created to own a number of real estate assets, physical assets. It will then serve as a landlord for those assets. It's responsible for getting clients to come and live in those or utilize those assets. It will collect the rent. It has certain overheads. The management of those assets are the REIT's responsibility, and it makes a certain profit.
That's right.
How do you decide as a REIT what the spread of your assets will be, and where do you get the capital from? Is it through the initial primary issuance, or do you already have a certain asset pool and then you go and you list and you basically have unit holders come in? How does the structure of the REIT get created?
So from our point of view, as per SEBI regulations, you are supposed to distribute 90% of your net distributable cash flows back to your unit holders. So for growing, for investing more, we need to go to the capital markets. So capital markets is either looking at debt or looking at equity. Today, we have a debt of close to 10,300 crores. So that's the debt we have taken over the years to grow our REIT.
Okay. No. So, but how does the ownership structure of the REIT work? Ultimately, you're talking about a trust. And so there will be original sponsors of a REIT, and then ultimately you increase the number of participants or owners of the trust, right? So how does that structure work?
So initially when we listed, there was a lot more interest from foreign FPIs.
Yes.
Today what we are seeing is there's a lot of family offices who are interested, HNIs who are interested. There was Blackstone when we initially listed who used to own 15% of the REIT. Blackstone then sold it to Abu Dhabi Investment Authority. And Abu Dhabi Investment Authority in turn today has sold it to multiple mutual funds. So today the ownership is 64% of our REIT is the sponsors. Balance is FPIs, retail investors, insurance companies, pension funds. So it's a mix of all that, the balance 36%.
And broadly, would you say that REITs in India are owned more by institutions rather than retail investors, individual investors?
That's changing. So the early days when the first REIT was listed in 2019, we were the second ones to list in 2020. Initially, most of the interest came from FPIs. That's kind of changing. And today there's a lot more HNI interest. So the first REIT, Embassy REIT, was listed in 2019. There were only 6,000 retail investors back then. Today, there are close to 300,000 people who have invested in the REIT market. But again, when you look at 300,000 people, with the 11 crore people who invest in equity markets in India and 5.5 crore people who invest in mutual funds, it's still a small number. But from 6,000, 300,000 is a big growth.
I'll come back to the scope of the buyers and how that is expanding and what the implications are for supply demand and ultimately the prices of the REIT. Let's come back to the perspective of the REIT, right? So ultimately the price of the REIT per unit is described by your share price that is tradable on the exchanges, right? You mentioned that you have assets under management of a certain size and you have a market capitalization of a certain size. Why is it not at parity?
So typically what happens is a REIT is valued based on 2-3 different principles. Somebody looks at a professional valuer who values, as per SEBI, we are supposed to value it twice in a year. So he looks at a fair market value based on, he discounts future cash flows and arrives at a fair market value, which is called the GAV, the gross asset value. From that, you deduct debt, you deduct security deposit, is what you arrive at your NAV. So NAV is supposed to be the true value.
Reflection.
True reflection. Sometimes there is a premium, sometimes there is a discount because the market is also going up, right? Like what we saw in the Hyderabad market, just last financial year, we saw the average rentals in Hyderabad going up from around 75 to 90. Still climbing. Efficiency rates which occupiers were willing to pay. At once upon a time, occupants wanted 80% efficiency.
What is an efficiency?
Efficiency basically means carpet area to the leasable area ratio. When you pay for 100 square feet, how much area do you get as carpet area?
Okay.
Used to be 80 square feet once upon a time. Today that's dropped to 70, which means you have more space to lease. So when these kind of things happen, when the market goes up, when there is a lot more rental increases than normal rental increases, which is typically 5%. In a typical contract, the client has 4.5 to 5% rental increases. But sometimes the market shoots up. There could be a client who's paying 50 rupees rental, who's decided to vacate, and we could lease that same space at 100 rupee, which actually happened last quarter for it, because the client who had a lock-in, he had a lease term ending, who ended up leaving, we get that opportunity, what we call the mark-to-market. So these are the ways one increases the value. We also increase the value by doing external acquisitions. External acquisitions can be acquiring from third parties. External acquisitions can be acquiring from our sponsor. Today, a sponsor has close to 18 million square feet, which is at different stages of development and completion. External acquisition can also mean where we have joint ventures with the landlords. Let's say we have a 1 million square feet project, the landlord owns 300,000 square feet of it. Over a period of time, sometimes landlords tell us that, okay, I want to
sell it to you.
I want to sell it to you, and they would first come to us because it obviously increases their overall value proposition when you're part of a larger park. So all these things help increase your gross asset value over a period of time.
And so it's much more than just a reflection of the real estate that you own. It's the expectation of how the yields or the rentals will move up over a period of time. Effectively, it is a measure of future value which gets discounted at the current level. Like any other equity.
Like any other. See, the key thing here is a lot of people look at REITs as a yield product, which is a wrong way to look at it. Yields today are around 6%.
Explain that for the benefit of, and I was coming to yield. Sorry to interrupt you, but I want you to explain this concept so that people understand this and why a lot of people traditionally looked at it and compared it to fixed income products, because ultimately your yield often is spoken about in the context of a debt product, of a bond, right? So you have an investment that you make in a bond, you get an interest or a coupon payment, and so if you hold it to maturity, you get a yield. In this case, you're talking about a real estate asset. You have invested in a REIT which holds a certain amount of real estate that cost a certain amount of money, and on that investment, you're getting rent. And that rent as a percentage of the overall cost is looked at as the yield. Correct?
That's right. That's right.
So why is that the reason why people have compared it to a bond or a fixed income product? Because more or less is predictability on how much you're going to get as a yield, right?
See, there is definite predictability that whatever, you could get a yield between 5.5% to 7%, depending on which REIT you have invested in. But that's a wrong way of looking at it, just looking at the dividend yield. Last week, you saw the returns on Sensex over the last 12 months was nil. Same time, if you had put money in Mindspace REIT exactly a year back, last week, September 3rd week of last year, you would have made a return of 36%.
Including the capital appreciation
of around 30% and yield of around 6%. That's the way to look at a REIT. I know things are not always going to go up.
It's not linear.
Yeah, it's not linear because you could have a COVID year, you could have a global financial crisis kind of a year. But even if you look at a 5-year period, we just celebrated our 5 years since listing. In the last 5 years, imagine the kind of things which have happened in the world. We had COVID. Everyone wrote off office. There was work from home. Everyone is working out of homes. We had a lot of SEZ vacancies which were happening. In spite of all that, if you look at it from a 5-year period, on an annualized basis, we have given more than 15.5% annualized returns.
Inclusive of the yield that you...
Including yield
dividend
and you basically where the share price has gone and the dividends which you've given. If you have to kind of divide it by 5 years, you're given a 15.5% plus, which in a world which is so uncertain, in a world which is there's so much of volatility, I think giving that kind of returns is quite commendable.
Okay, certainly. I want to get into some of the aspects because, yes, you're seeing that the last 12 months has been great, right? But there was a period of lull. In fact, if anything, the last 12 months has been catch-up. And there were a few niggling issues that came about. Something about special economic zones, something about, the renters in those markets. What happened?
So 3-4 things. So I'll first talk about the market and then go to SEZs. Back in 2021, the office market demand was around 25 million square feet, net demand of office. That's come back to 50 million square feet. So office absorption, a lot more.
Because people came back to work.
Yeah. And companies growing. They didn't grow in 2020 and 2021 because of COVID. Vacancy levels, which used to be around 18%, today is dropped to 14%. Back in 2015, most corporates would look at an SEZ where demand for SEZ versus non-SEZ space was 50-50.
Okay.
Why would they go to SEZs? Because most office demand came from IT services companies, large IT companies, and they were getting the tax rebates in an SEZ. That had changed by 2020 because the tax benefits had gotten over in SEZs.
Sure.
So demand became 90% of SEZs 90% non-SEZs and 10% SEZs. So 50-50 became 90-10. And all the developers were left with vacant SEZ spaces, including us.
Okay.
So the government in 2023, highly supportive government, who came out of the rule that even if you have a floor vacant in an SEZ, you could convert it into a non-SEZ by paying a certain fees to the government.
Because I just want to clarify, so those SEZ properties were available to you at a discount or at lucrative prices? Is that or was it the tax rebate that
we own those properties?
I know, but
tenants were not showing interest because the tax breaks.
No, but I'm talking about why was it beneficial for you to acquire assets in the SEZ?
We also got SEZ benefits.
Sure.
Construction costs would have been 15 to 20% lower on stamp duty, custom duty, all those things.
Which is why you had to pay the government a cost to convert to non-SEZ.
Non-SEZ.
Right.
So what we have done, for example, is we have converted close to 22 lakh square feet of ours, which was vacant, to non-SEZ space. Vacant SEZ space have been converted to non-SEZ and managed to actually lease 16 lakh square feet of that.
Okay.
So that's worked very well for us, and thanks to the government, they came out of these rules in late 2023. And it's kind of played out over the last 1.5 years. We've been able to increase our occupancy. Back then, our occupancies used to be around 87%. Today, our occupancy is nearing 94%.
Okay.
So we've been beneficiaries of that rule change.
Okay. And this is a process that is ongoing. There's still more to go. And when do you see that completing?
So it depends when. Even today, we have a lot of SEZ space, which is occupied by various occupiers. We can only demarcate it when they leave the space.
Right.
And we also have to wait till one full floor becomes vacant. Let's say it's a large floor and one tenant, which is half the floor, vacates. We still cannot demarcate it. We'll have to wait for the other tenant also to go to demarcate.
So the potential for occupancy is actually much higher. It can go maybe on the next 1.5 to 2 years. What is the average lock-in period that people get into? What is the kind of terms that people get into?
Typically, occupiers sign a 10-year lease.
Okay.
Lock-in periods vary between 3, 4, 5 years is the lock-in.
We've talked about the potential. We've talked about the fact that it's a steady state earner. There is potential for capital appreciation also. We've spoken about the various reasons why that is. Now, I do want to ask about a couple of things. One is that the recent tagging by the Securities and Exchange Board of India of REITs as equity. And you made a statement. You said that it shouldn't be looked at as a rental asset or yield asset, and you've spoken about why. What are the benefits of being tagged as equity? Does that mean that there will be more buyers that come through, especially in the mutual fund space, where now in a number of categories they will be able to include REITs in their portfolios?
So simple logic, Alex, here. You widen your investor base. There's a lot more interest. There's better price discovery. There's more liquidity. So let's look at the Indian mutual fund sector. Close to 75 lakh crores, the mutual funds
assets under management.
Under management. Out of this, 60% are equity funds, around 20-25% are debt funds, around 8% are hybrid funds. Because we were classified as a hybrid fund, there was always a confusion if we are a niche product or a mainstream equity product. Today, that confusion is over. We are no longer a hybrid product. We are a simple equity product, which means we would get included in various indexes, which means, let's say, there are these large American ETFs, which are the index funds, which are there, who would have a Asia allocation, a India allocation. We would have that kind of money coming in. And given that the product to the market, being an equity product, has been simplified, we feel there would be a lot more retail investor interest also. Mutual funds silently have invested like 30,000 crores in REITs over the last few years.
Okay, so we've covered a lot of ground, but let's also talk about the tax aspect of it, because ultimately there are two forms of earning in this. You either have capital appreciation, as you've described very aptly, and you also have a regular distribution by the REIT to unit holders. How do you ensure, or how do investors in your REIT get taxed? I ask this because there are two ways in which this is calculated.
So from a distribution point of view, what we do is around 55 to 60% is given as dividend, which at the unit holder's hands, he doesn't need to pay a tax. Around 5% is given as interest component, which is taxed at tax slab of what the unit holder is, and balance around 35% is given as capital repayment, where on receipt he doesn't pay tax, but when he sells, he pays short-term or long-term capital gains tax as applicable. This is one of the key points of investing in REITs, which the market needs a lot more education
on. Yes.
So what you get, most of it is tax-free.
Okay, so and the reason why I asked you this is because there is a second way in which this is calculated, and that is effectively, by the way, if you're wondering about this, is that if the REIT has moved to the lower corporate tax rate, then the unit holder will have to pay tax at slab rate for the entire dividend that is received. But in the case of Mindspace REIT, as we've established it, let's actually drill this down and illustrate it so that people understand. If as a unit holder, I have received 1,000 rupees of payment, or 100 rupees of payment, right? 60 rupees of that
55 to 60 rupees.
55 to 60 rupees of that is a dividend payment for which I pay no tax.
No tax.
5 rupees of that is the interest component for which I pay based on slab rate.
Yeah.
And the remaining 35 rupees gets adjusted with what I have paid initially, my original acquisition cost.
That's right.
That original acquisition cost, this gets deducted from that.
Yeah.
And then what the final value of whatever I sold, when I do sell, is used to calculate the gain or the loss, to calculate the incidence of capital gains.
Capital gains. And what we do we do it very transparently. SEBI regulations are there. Once a quarter, when we give these dividends, it's clearly mentioned what is the breakup of all these three aspects.
Yeah.
Once a year, we also send a Form 64B, where the unit holders can use this in their tax filing.
Yeah, and of course, ultimately, when the sale happens, there is capital gains that has to be booked at 12.5% long-term capital gains, because ultimately it's a listed equity asset.
That's right.
Okay, so it's pretty clear, and I think that we've covered quite a bit of ground. I'm sure that there will be questions that emerge, and I'm sure that we'll have an opportunity to speak again. But thank you so much for joining me today. Absolute pleasure.
Thanks, Alex. It was nice being on your show.
Well, we tried to cover all the ground on real estate investment trusts, and I hope that we've done a good job. Let us know what you think, and if you've got additional questions, like I said, we'll address it on future shows. Thanks so much for tuning in. This is NDTV Profit.
One night before we were supposed to get the money in the bank, we get a phone call and the deal was off. We were in the middle of COVID. We were in a situation where we did the math that at zero revenue, we could not survive more than 3 to 4 months.
You're 25, you work for a multinational, you're living in the south of France.
Yes.
And you're not liking it. You want to come back to India and work harder.
We realized that legally it was, not allowed to work more than 35 hours a week. When I asked my boss for a permission to come on a weekend, he got very upset.
तो आप वो Indians हो जो सबका नाम खराब करते हैं. Tell us what the kernel of the idea starts from before you go mass consumer.
People are opening multiple browser windows or tabs to do the same search on 3 OTAs, 2 airlines. So we built this meta search engine that would, crawl or use their APIs to give you where the best deals were, and then we would lead you to them to buy.
You almost finish each other's sentences. So that chemistry is really there. One thing that really annoys you.
Hard to, have a discussion that's not very objective, because he's the one who's more data, numbers and objective driven at times.
Sometimes, I have to control his positivity about certain things. Hold on, this might not.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
अरे और रहमान सोनू निगम के लिए जोरदार तालियां.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
Manish Sonthalia, Director and Chief Investment Officer of MK Investment Managers, with us this morning. Manish, thank you so much for taking out the time. I know you were on your way somewhere. You stopped your car to do this conversation with us. We deeply appreciate it. And it was also important because we want to try and get a sense from you on what is the mood right now. Is there panic because of these, tariff tornadoes or tariff tsunamis which have come overnight? Or is there a sense that this is more of the same?
So, Tamanna, every day there's something new that is coming on account of tariffs, and obviously India is also getting impacted because of that. But somewhere down the line, there is also a realization that, everything said and done, the earnings downgrade cycle is somewhere close to the bottom. That whatever earnings downgrade one was to have seen as far as India is concerned is coming to a close. And you could say that there's also been some compression in P multiples. So from that point of view, if the flows continue to remain what they are, I'm talking about the domestic flows, then it's okay. I don't think there's much to panic. I don't see too much of panic in investors' minds. In fact, people are looking to deploy capital in these declines. I don't see any panic as such.
Manish, that's a strong statement and good to hear that. In fact, day before yesterday, HSBC upgraded India to overweight, and when we spoke to Harold van der Linden, his call was that his Asian clients seem to be believing, and they seem to be telling them that even if the thaw between US and India were not to happen, valuations relative to history are in favor, and 2026 allocations would mean FI flows would return. So if the domestic flows stay strong, and if HSBC's thesis on global flows is correct, are we actually looking at some upsides, and significant ones at that, over the course of the next 6 months?
The harakiri in the market today is the currency. The currency depreciating. The currency depreciating to 89 and below that. Of course, one could say that Indian currency is somewhat undervalued at these levels. It's not overvalued. At one point in time, it was overvalued. Now, based on the current situation, Indian currency is undervalued. So from that point of view, the negative implication of all the export embargoes and tariffs, etc., is broadly more than priced in the currency. And if the currency is undervalued, you don't have too much of an impact on earnings, or whatever impact on earnings had to happen has already played out. There's still rate cuts that are likely to happen. I think there is a case of a buy only. There is no case of a sell per se. There could be some time correction. The markets may take some time to digest this, but absolute downfalls in the market from these levels, unwarranted according to me.
So what would be the play here, Manish? Let me just get your take on Pharma, for example, the latest recipient of attacks. Just thinking back on all the whole host of attacks. There's an H-1B attack, impacts IT. Then there is at one point an auto tariff which impacts auto companies. Now, Pharma we thought would be staying away because no country wants to impact something like the price of drugs for its population. But nevertheless, what do you see when it comes to the pharma companies? What's been your assessment?
Yeah, so I think all the four major tariff announcements today does impact India to some extent. Of course, the pharma being the largest component of the tariff, in today's announcement, there's some ambiguity currently whether, the entire value chain is going to get tariffed or only the final branded formulation is going to get tariffed if it's not made in the US. So this would have implication for the CRDMO, CDMO, CMO companies. If the entire value chain is to be taxed, if the entire CMO, CRDMO facilities are not there in the US, if that is also going to be subject to 100% tax, then there is a wider impact. On the other hand, if the only final branded formulation is to be tariffed, then there's a limited impact. Of course, we also don't know whether specialty or complex generics are to be tariffed or not tariffed. So at this given point in time, I would believe that the large pharma companies, something like, the Sun Pharmas of the world, they have some 15-16% revenues, which are basically likely to get impacted because of these tariffs. Or there could be some branded plays for players like Lupin and, Cipla and Dr. Reddy's. But that's about it on the headline implication, because Section 232 is also implied currently, and, biologics, etc., not falling within today's tariff announcement. It's only the branded portion which is going to get tariffed at 100%. So, we need clarity as to whether the entire API value chain is also going to get tariffed because they go into the branded formulations, or only the final branded formulation is going to get tariffed. So that is one piece. Auto and auto components, heavy trucks, $2.5 billion worth of heavy trucks exported to the US, plus $2 billion worth of auto components. Now they are going to be tariffed at a higher rate. These have some implications. Bathroom vanity fittings, etc. Again, India has some exposure in terms of exports. Some $1-2 billion worth of exports of that component also goes through. Upholstery, furniture, that is also some. So all in all, you'll have a impact of $5-6 billion on the other components, apart from pharma, which is the biggest piece, $10 billion. Of course, branded is totally out, so we are saved from that front. But generics is totally out, so we are safe from that front. Branded is going to get impacted, yeah. So these would have short-term implications, and one should build in 50% collapse in revenues from what we were getting previously in the short term.
Sorry, 50% collapse in revenues?
That is how you should build in. That is how we should build in our models, right? If let's say 16% of X company's revenues is branded formulations, you assume that 50% of that is not going to come through, and 50% is what you are going to manage with the higher tariffs. So that is how you try to quantify the implications in terms of numbers for some of these companies.
Okay, Manish, what is your sense on what's happening on the positive side, which is demand and domestic demand in India post GST 2.0? We are now, 5 days into Navratras. Are the telltale signs, and I know you do a lot of groundwork, are the telltale signs that the demand has been strong, and is it across categories?
Autos is clearly a flyer. There is no doubt about it. Autos is flying off the shelf. Even anecdotally, previously also, whenever excise duties, when we were in the excise duty regime, they came down. Autos did really well. And I think speaking to retailers, etc., the festive season demand has been a mixed bag across categories, but discretionary somewhat is looking much better than previous Diwali, is what retailers tell us. And consumer durables, automobiles, these are some of the areas where things have started to look up. Not so much in the other category, but yeah, GST positive is basically felt into durables and autos is what we can fathom at this given point in time.
And is it getting restricted to just that, durables and auto, the whole FMCG boost that was expected and the re-rating of your consumer staples? Manish, do you think that that's not really panning out?
So biscuits, etc., the point is that the prices are not coming down, but grammage is going up. So whether that is going to lead to more offtake in terms of the number of packets, etc., not too much of anecdotal evidence out yet, but there is hope that as things stand and as things move forward, this is also going to look up. Plus, we are having some very good monsoons, so FMCG, no direct beneficiary that we have come across at this given point in time. Of course, companies have taken a price cut as per the government's directive, or there has been an increase in grammage. So we'll have to wait and watch and come to specific numbers as things progress in the coming months.
Just one point on IT, and of course Accenture's read-through was looked at very, very closely, some varying views on what it really means for IT stocks. All of them are seeing the hit today. Do you think we're going to see another rough quarter, especially with this overhang of H-1B visas?
Yeah, sentimentally the things are negative for Indian IT per se, and but Accenture numbers were not that bad. I mean, Accenture numbers in terms of upping their hiring, etc., is pretty much at par. Only thing is that this H-1B visa is going to raise costs for Indian IT guys. Something to the extent of 2 to 3%. Plus, there is going to be lowering of multiple. Of course, multiples have already got lowered significantly. But on the tailwind side, you have the currency depreciation, so that is going to aid things. But all in all, this 1 lakh for new applications on the visa front, on-site hiring is likely to go up. There is going to be some dent in margins, but I think all in all, there is deep value in Indian IT companies at these prices.
Thank you so much, Manish, for speaking with us and taking out the time. There are consistent tariff attacks and new surprises and shockers coming in from the United States right now as far as trade with India and the world is concerned. How do you build a portfolio? How do you preserve your capital in a time like this? That's what I'm going to ask Vikas Khemani as my first question. He's founder and CIO at Carnelian Asset Management. Joins us on the Talking Point this morning. Vikas, great to speak with you and have you on. Thank you so much for your time. When you woke up this morning and you saw all the series of posts, what was the first thought that came to mind?
This is nothing new. I think we have been used to it now for the last couple of months. So it's the first time in any history, at least I have grown up believing that when you see any policy change through the Twitter and with a lot of sort of vagueness in it, right? If you are making a policy change, you are actually supposed to release a proper circular with a lot of details saying that what includes, what doesn't include. So it just creates a very huge tentative environment, uncertain environment. But I think that's what the individual likes. So I guess we have to get used to it, and he has power. But my take on this is that it's not negative for Indian pharma companies because Indian pharma is largely generic, and US cannot afford to put any tariff on generic drugs. It is mainly meant for branded, patented drugs, where India is very, very small. It could be less than 10% for some of the companies, not even all the companies. So I do believe that and when the details come out, you will know that probably that may not be also covered. So and there will be way-arounds and all. So I don't think it is negative for India or Indian pharma company per se.
I think what is more negative is their continued onslaught, right? Every day it's something or the other. Last week it was H-1B, now it is Pharma, and you know that something new is going to keep coming. In that sense, do you think the market is bracing for what comes next and is unable to find its feet?
Not really. I think, it's not, I don't read it as a targeting against India or say, but it is basically, he's been saying this, how he wants to bring back manufacturing to US. And so it is also a lot of things. Why, my own view is that, why you want to do through Twitter is that you want to just address your voter base, that you are, you want to be seemingly taking some actions against, which says that, I'm making America great again. but the far more consequences could be far more deeper, and it actually might not be really what intended consequences are. And in fact, I feel that if they get implemented, US will have a huge inflation. But I'm sure, hence, like in H1B case, visa case, first they just released the issue, and then they came out and say, look, it does not apply to the stock of the H1B visa, only to the new visas and all. And I'm sure there could be some again tweaks around going forward. So point is that I think it's just to be done, in my opinion, to address their own vote base and say that I'm doing something. But fact is that, in India is doing only generic medicines, which I think is by and large fine. I don't think it'll get impacted.
Buy into pharma stocks today as this panic sets in. Is there a contrarian trade there, Vikas?
Absolutely. I mean, I don't see any reason why, you should not buy, depending on your research and view on this. But we are positive on pharma names, and we've been holding, and we have not changed anything, in our portfolio. And, like how we saw in IT, first reaction was negative, and then most ITs recovered. So I think, as the first reaction always is negative in markets, and then you will see slow recovery happening.
I'm just trying to understand if you have that same view as far as IT is concerned. Because even when the H1B visa issue came up, the commentary was that a lot of Indian IT companies have already weaned off H1B. They don't have that much dependence anymore, etc., etc. Now, Accenture's results, which came in yesterday, though better than expected, don't seem to give confidence that the macro environment's looking up. How do you see it as an impact or a head start for Indian IT companies ahead of the results?
So see, Indian IT companies, there are two sets of Indian IT companies, and I think that is where I think the large IT companies and the mid-sized IT companies. Large IT companies are going through in a process of, building a lot of capabilities as far as the AI and, related fields are concerned. And as that happens, it might take some time, but also they will save some cost. But if you see order book or order wins of most IT companies has been very, very decent. So I don't think while there's, given their basis, you can't have very large sort of growth coming through any which way. So the right way to look at it, in my opinion, IT company, mid-sized IT companies will do well. And every time there's a technology transformation or transition happens, you find new set of companies doing very well. For example, in 2009 or post-2000 global financial crisis, in 2009 to the next 10 years, companies like Persistent, HCL Technology, LTTI, LTTS, Mindtree, they were minnows, and they became, 10 to 15x, 20x, 25x in